I would like to request the speakers for today, CS Gopal Krishna Hegde, CS Vijay Kumar Sajjan, to kindly adorn the dais. Request CS Devika Satyanarayana, Chairman Bangalore Chapter of ICSI, to kindly accompany them. Thank you. Now I would like to request everybody gathered in this particular auditorium to kindly raise for the motto song of ICSI.
हम के खिले जो रोशनी कह देंगे हम संसार को, कोई लक्ष्य नामुमकिन नहीं, ज्ञान के और न्याय के हर राह को थामे हुए चल पड़े हैं झूम कर बस गीत ये गाते हुए। सत्यम वद धर्मम चर, सत्यम वद धर्मम चर, सत्यम वद धर्मम चर। कदमों की हर एक गूंज में बस जीत का एहसास हो, राष्ट्र प्रगति पथ पे हो और आत्मबल की आस हो। जब भी चले इस भाव से खुलते गए हैं रास्ते, आवाज हमने दिल से दी है गीत ये गाते हुए। सत्यम वद धर्मम चर, सत्यम वद धर्मम चर, सत्यम वद धर्मम चर। हर उन्नति के रंग में हर भारतीय हाथ हो, उद्यम हो या उद्योग हो, हर ओर अपना साथ हो। जाना शिखर तक है हमें सच की कलाई थाम कर, हम जीत के सुर छेड़ेंगे गीत ये गाते हुए। सत्यम वद धर्मम चर, सत्यम वद धर्मम चर, सत्यम वद धर्मम चर।
Thank you very much. With that, I would like to call upon CS Devika Satyanarayana, Chairperson, Bangalore Chapter of ICSI, to kindly welcome you all and give an introduction address.
Elrigu Namaskaram. A warm good afternoon to one and all gathered here today on a very auspicious day where we need to complete our creditas, and we get to hear from the veteran himself along with another very learned company secretary. Yes, as I welcome you all, I definitely would like to inform you that the day that was earlier decided had to be moved to Thursday, that is today, because of various reasons which were beyond our control, and I'm sure all of you would understand that, and thank you so much for your kind cooperation and your understanding the situation. It's been our endeavor from the Bengaluru chapter to always conduct some of the best sessions and ensure that the members and students get the required training and updation of their knowledge. It is definitely an emotional moment for me as well as the Bengaluru chapter to see such a huge gathering wherein, this looks like a national convention or a regional conference. We're just short of that. And we are really excited to see you all. And we wish to continue to see such situations in future as well, not just in the time around March or Feb. Having said that, as you all know that Bengaluru chapter is a diamond grade chapter amongst the 3 diamond grade chapters in our country. And we also won the national level best chapter award for last year. Yes, thank you so much. A big thank you to the Bengaluru Managing Committee for all their cooperation. a great gratitude to our Bengaluru staff, headed by Noor, Putraju, Venu, Priya, Nagraj. Can we have a round of applause for them, please? Because as I speak this, there is a CLDP going on, there's an EDP going on. Tomorrow we have another CLDP starting, and they're always running. I see them literally running all the time. Hats off to all your efforts, Noor and your team. A big thank you to all our housekeeping, security, everybody who has been helping us day and night to keep the premises clean and able to use it the best possible way, because we all know that Bengaluru chapter has the best of the premises across the nation. Having said that, I know that many of the members have come from various cities, states, districts. A warm welcome to all of you to Namma Bengaluru. I'm sure you will have a wonderful session going forward. As you all know, financial statements are very critical for any company to understand the performance of a company for a specific period. So also it is very important and pertinent to understand and analyze the balance sheet and the profit and loss accounts in a perspective of a company secretary. So when we were discussing this, it was then that our veteran, CS Gopal Krishna Hegde sir, said that he would engage this class, and we were really, really very happy. Can we have a big round of applause for him? Because, sir, we welcome you on behalf of Bengaluru chapter. We look forward to a very interactive and interesting session from you. We also have another eminent speaker with us, the former chairman of Bengaluru chapter, CS Vijay Sajjan Kumar. Warm welcome to you, Vijay. Yes, and we have with us our secretary of Bengaluru chapter, Vishwas as well, who's seated here. Along with us, I recognize the presence of our central council member, Dwaraknath sir, who's here present here today. Our former regional director, Mr. Sajeevan sir, is here with us today. Our former chairman, Subbarao is here with us today. Vivek Hegde is also here with us today. Thank you so much for all your presence, and respects to all the senior members who are present here. And for those who are not able to get your seats here, arrangements have been made in the first floor. There are 2 classrooms where we have the live screening happening. Kindly make use of that. We have already mentioned in the flyer that it's a first-come, first basis, and we are trying our best to accommodate the maximum number of members possible. Having said that, it's my privilege to stand before you and read the profile of CS Gopal Krishna Hegde, who doesn't need an introduction though, but it is my privilege and honor to formally introduce you to him. Mr. Hegde sir is a chartered accountant and a company secretary, is a chairman of STRTA Consulting Services Private Limited, and Executive Director of Shrigem Corporate Services Private Limited. Previously, he was Director of Finance and Legal, Unit of Emerson Electric Company USA, a Fortune 500 company. Mr. Hegde has over 40 years of extensive experience in corporate finance, accounts, taxation, audit, secretarial, legal, HR and IR, and administrative functions, and worked at various leadership positions in reputed corporates. Mr. Hegde served in leadership positions in premier professional institutes set up by the Act of Parliament, the ICSI, such as Chairman of Bengaluru Chapter 2006, Chairman SIRC 2009, Member of National Council of ICSI for 2011 to 2014, and 2015 to 2018, Chairman ICSI Core Group on Corporate Governance, Chairman Corporate Laws Committee, Chairman Expert Advisory Board, Vice Chairman Peer Review Board, and Member Task Force, Plan Budget of Ministry of Corporate Affairs, Government of India, Member Secretarial Standards Board of ICSI, Member Accounting Standards Board of the ICAI, and former Central Council member. Can we have a big round of applause to him, please? Sir, it's an honor to have you here with us, who has been a mentor, a guide, a friend, a philosopher as well, who brings out a smile and is always beaming with a smile, who has been a veteran for over 40 years as a company secretary. Thank you so much, and may I request Dwaraknath sir to please come over to present a sapling as a token of our warm welcome on behalf of Bengaluru chapter and all the members present here. With a big round of applause, please. It's time to introduce and welcome our former chairman of Bengaluru chapter, CS Vijay Kumar Sajjan, who's a fellow member of the Institute of Company Secretaries of India, holds a bachelor's degree in business management, and has also cleared the final examination of ICAI. He possesses over 15 years of extensive pre and post experience in both pre and post qualification corporate areas. He served on the managing committee of the Bengaluru chapter of the ICSI from 2015 to 2022. He is a regular visiting faculty member for company law at the Bengaluru chapter of ICSI and ICAI. He was the vice chairman of the corporate law committee of FKCCI for the year 2021-22 and is currently a member of the corporate law committee for the years 22-23, 23-24 and 24-25. He is presently a practicing company secretary operating his own office in Sheshadripuram, Bengaluru. He serves as a member of the advisory board for Sri Sharada International School and Sri Sharada PU College, both esteemed institutions located in North Karnataka. He is an independent director on the board of Leapfrog Engineering Services Limited. He was honored with an appreciation award by the then Deputy Chief Minister of Karnataka, Sri B.S. Yediyurappa, for achieving the highest marks in the CA Intermediate Company Law subject within the state of Karnataka. So we welcome you, Vijay, and may I request Mr. Sajivan sir, our former regional director, to please come over and present a sapling as a warm welcome on behalf of Bengaluru chapter and all the members present over here. Can we have a big round of applause to him, please? Friends, we'll be commencing the session in just 1 or 2 minutes because we need to set up the stage. Till then, kindly bear with us. And once again, I welcome you all to this beautiful session. Thank you so much, and I'm sure you will have a great day ahead. Thank you all so much.
Thank you, Chairman. I would like to request the speakers for today's session, CS Vijay Kumar Sajjan and CS Gopal Krishna Hegdeji, to kindly take over from here.
Very good afternoon. Namaskara. Still, I am not getting any voice from balcony. I think heavy lunch after the 2 o'clock or 3 o'clock. Namaskara. Yes, I once again welcome you for this afternoon one-day session. Afternoon one-day session from 3 o'clock to 8 o'clock. Almost 4.5 to 5 hours session from 3 o'clock to 5 o'clock. First of all, I would like to thank you, Chairperson Devika Madam and other committee members and Bengaluru chapter team headed by Noor Madam for inviting Hegde sir and myself for the one-day topic on analysis of financial statements, decoding the CSV. And once again, I thank you for Hegde sir inviting me to join with him for dealing with this Schedule 3 of the Companies Act 2013, because chapter is invited initially Hegde sir, and Hegde sir invited initially, I think one fine day, Wednesday or Thursday, he called me and immediately said that, why don't you join with me for dealing with this Schedule 3 topic of the Companies Act 2013. Together we will deal with this topic. It is an appropriate topic for both of us. Sir, thank you for inviting me on behalf of chapter and joining with you for this seminar. And I thank you all the committee member, Central Council member Dwarkanath sir, for giving me an opportunity to deal with this Schedule 3 topic. Schedule 3, it is a, normally company secretary may think that it is a chartered accountant subject. It is not a company secretary subject. We will only receive the balance sheet. We will attach to the some prescribed form and we will file before ROC. But we are taking a different dimension wherein we are not talking about preparation of balance sheet or how to recognize the revenue or how to disclose the balance sheet. As far as company secretaries is concerned, how we should take care of this compliances of the Companies Act 2013 by receiving, on receipt of balance sheet, how we can verify all the compliance and how we can certify as a practicing company secretary, or how we can sign the balance sheet as a whole-time company secretary. We are going to deal with this for another 4 to 5 hours. So with this small remark, I will I invite Hegde sir to give an opening remark, and thereafter we will start regular session.
Madam Devika Satyanarayana, Chairperson of Bengaluru Chapter, Mr. Vishwas Hegde, Vice Chairman, Bengaluru Chapter, Mr. Vijay Kumar Sajjan, my esteemed colleague who will be partnering with me in today's session, Mr. Dwarkanath, Central Council Member, Mr. Sajivan, he highly knowledgeable person is here amongst us. Mr. Subbarao, past chairman, Mr. Kedarnath, Mr. Vivek Hegde, distinguished members of our profession, Namaskara, good afternoon. I am told by Madam Devika that delegate registration has touched 280 for today's program. Is it the highest ever? When a review of movies happen, they say first 3 days it has joined the 100 crore club. First week itself 200 crore club. Now today it is nearing. Good. I know there are different reasons for this high number of delegate participation. If somebody says, I am the reason, I also feel happy about it. Huh? Good. Good. I like it. It is always a pleasure being part of big events, the celebrations. Our motto song repeatedly we have been hearing Satyam Vada Dharmam Chara. If you read further 1 or 2 or 3 lines from that Taittiriya Upanishad, one important line is Swadhyayam ma pramadaha. Study, continuing the study, I will never deviate from that path. As continuing education program, very few professional bodies have it in India now. CS, CA, CMA. Other professionals are struggling to have any structure, any proper regulation for that. Let us leave their problem to them. Now talk about the subject of financial statement. All of you see prospectus, DRHP, RHP, prospectus, etc. filed for public issues with SEBI, with the stock exchange, etc. 350 page, 450 page, 500 page. One question, when you download, open it, which chapter you would like to read first? Which chapter? As an investor, not as a company secretary. Risk factor. Risk factor. Okay. Even smallest IPO will have minimum 100 risk factors. I have been going through this document. Minimum 100. Does investor stop there? Investment keeps happening. September 2024, the peak, NSE and BSE, we have seen that. Last week, Nifty has gone up by 4.25% and BSE 4.16% in 1 week. That means 3,000 Sensex points gone up. Do we say that it is bottom out time? But investors are cautious. Why this subject? All these activities are around the figures. Finance chapter in the prospectus is what attracts the investors, whether the retail investors, institutional investors, anchor investors, any category. They look at that only. Last 1 week's time, I had meeting with 4 anchor investors for an upcoming IPO. DRHP has been filed a month back, 1.5 months back. They have the document, but the discussion starts with finance only. The figure. I have a liking for the figures. One should be able to figure it out. Then every figure will look beautiful. It will have its own significance if we understand that. Economic situation, I was referring to BSE, NSE rallying. Come 7th April, MPC of RBI is scheduled to meet to decide about the interest rate. Rupee has been strengthening against dollar in the last 1 week, 10 days. Yeah. If you try to look at the reasons, everywhere you will have to understand the figures only. US Federal met last week, 1.5% annual growth of GDP for US, and they say inflation will be within 2.5%. US Federal decides that 2 times rate cut will happen in the year 2025. First indication. Then Bank of England decides not to change the interest rate. Bank of Japan not to change the interest rate. Then People's Bank of China estimates GDP growth to be 3.1% and hold on to the present interest rate. Everywhere, figures, figures, figures. All of you have heard the name of Chanakya? Arthashastra. I would like to quote one from his Arthashastra. Tyajanti mitrani dhanai vihinam putrascha darascha surijjanascha. When a person is seen as not having wealth, money, dhanam vihinam. Tyajanti mitrani, even friends leave you. Putrascha darascha, very harsh truth. If that poverty situation continues for longer time, even the wife, the children also start disrespecting the person. Maybe they will desert him also. Surijjanascha, the servants, the acquaintances, professional colleagues, everybody will tamartavantam punarashrayanti. Think of a situation where suddenly he regains the wealth, maybe because of some strategic investment in stock market, and he is able to encash it, value buys last week, and after 3 weeks booking profit, he is back as arthavantam. Then punarashrayanti, all these people who are deserted will come back. The message is artho hi loke manushasya bandhuhu. It is the money, it is the wealth that is the best friend on this earth. Now, how do we understand that value of money? How do we understand how to earn it, how to retain it, how to invest it, how to appropriately utilize it? What are the measures for checking the rate of return, adequate, not adequate? All these are possible when one is able to analyze the financial statements. Individuals, corporates, institutions. Today, the topic is analysis of financial statements. All of us are company secretaries. Generally, the focus is on compliance with, what is that, section 205. Compliance with the presence of Companies Act rules and all other laws applicable, etc., etc. Major amendment to the Schedule 3 came on 24th March 2021, right? Effective from 1st April 21 onwards. So financial year 21-22. I think April 22 onwards, Many of us, the company secretaries, were very much in demand. Even chartered accountants approached us. Many companies' CFOs approached us, helping them, seeking the help for complying with the amended Schedule 3. My experience. If you also experienced it, you can show your hand and watch for it. That was an opportunity. Let me share with you two cases, because the process involved not only looking at the financial statement for their financial year 21-22, the previous year figures will have to be given along that. Analyzing the previous year's figure, regrouping, reclassification, it is almost recasting the financial statement of the previous financial year 2021. In the process, I could catch hold of the nerve of two enterprises. I said, I want a meeting with the managing director and your director of finance. Yes. I went on explaining the trouble points, sweet spots, etc., etc. One company, they had good orders on hand, not able to execute it for want of finance. Their financial statement was in a mess. In my meeting with them, I advised need of the hour is infusion of some long-term fund. How to do it? Different options were discussed, and in 6 months' time, they made IPO. Professional opportunity was encashed. Just initial fee of maybe 5,000, 10,000 rupees for helping them to comply with Schedule 3 disclosures. Then they ended up with lakhs of rupees billing. Look at the importance. Where there is a money, there is a money for you also. Yeah. And in case of another company, IPO was not the option by the promoters. Then equity investment took place, infusion of long-term funds. In the course of today's analysis, we will understand the importance of this analysis, these figures, etc. The topic is decoding the CS way. When I look at the financial statements, one is the presentation part, the disclosure part, other one is the figures. Every description in the line item, every figure there will have its own significance, its own importance. This session, Mr. Vijay Kumar Sajjan and me, we will be sharing our thoughts and our experience on the subject with you. You are all highly learned, experienced professionals. In the course of this deliberation, questions are welcome at any point of time. No need to wait till the end for question and answer. I repeat, questions are welcome at any point of time, and answers are also welcome. At the end of the session, we will have some case studies, live. We have picked up 3 companies' examples. one best company, one worst company, and another one in the middle range. 3 case studies, we will do it. It will be very interesting. It will be at the end of the session. Now, we will start the presentation. It may take 1 or 2 minutes to rearrange the table chair here. Request for your understanding.
Before starting a formal technical session on Schedule 3, I think for any session, there will be some disclaimers will be there. So disclaimer, there are few disclaimers. One is we are not going to deal with each and every provisions or sections. So we are mainly concentrating on how we, company secretary, can make a use of balance sheet for compliance purpose. So we are not going to deal with each provisions, each sections. That is first disclaimer. Second disclaimer, we are not going to discuss about accounting standard disclosures or some judgments or case laws related disclosures or implication of case laws or implications of some judgments or some interpretation issues, because Schedule 3 is a vast subject. Schedule 3 means it is and I think we can cover entire Companies Act, including income tax, including other applicable laws also we can cover. But we are not going to cover other laws, we are not going to cover income tax or other laws. We are restricting ourselves to only to the compliance related angle as far as mine is concerned. And sir, I think there are 2 sentences, analysis of financial statements and decoding the CSV. I am decoding the CSV and sir is mainly concentrating on analysis of the financial statement, if I correct, sir?
Together, we will be dealing with the decoding as well as analysis.
Yes, sir. Yes, sir. Because mainly preparation of balance sheet or preparation of financial statement is a domain knowledge of the chartered accountants. So people may think that why we have to study for balance sheet and other things, as I told in the opening remarks. So how we can make use of this balance sheet analysis for the company secretaries, we will deal one by one. I think.
Is this visible or light will have to be? Can you read it now?
I think you can switch off this. It is switch off. You can switch on the back side.
Back side is light.
Back side will switch on. This one you can switch on. This front row. I think all are visible. Oh, okay.
Oh, okay, fine.
So
again, I repeat, is it visible? Yes. Thank you.
There are a few members and students are sitting at first floor and second floor also. If you switch on front side lights and all, they may not be visible. I think screen may not be visible for first floor and second floor also.
Go ahead.
So because of first floor and second floor, let us have front side lights also little bit. The today's topic is financial statements. The financial statement definition is derived from the section 2 subsection 40. There are 4 parts are there. So we have to deal one by one each part. First one is balance sheet for the year ended so and so year. Second one is profit and loss account or income and expenditure account, as the case may be. I think definition says profit and loss account, but Schedule 3 says it is a statement of profit and loss. Here it says account. In Schedule 3, wording used is statement. Third one is cash flow statement, unless it is exempted. There are some exemptions for our OPC companies, small company, dormant companies, startup private companies. It is a voluntary for them. If they want, they can include cash flow statement. If they don't want, they can. So there is an exemption. And last but one, statement of changes in equity if applicable, and the explanatory notes attached to any of the above documents. So there are 5 parts under finance statement, section 2, subsection 40 of the Companies Act 2013. So we have to go by each and every parts of this finance statement.
Yeah, Vijay, you raised a question whether it is profit and loss account or statement of profit and loss.
Yes, sir.
What it should be? Yeah? Statement. So it is not profit and loss account, it is a statement of
profit and loss account after this 2013, but even though section 240 uses the word account.
Okay.
Since
In agreement? No, one fundamental question now. Statement of profit and loss, both can happen simultaneously or what?
I think audience has informed, sir, already. Or, it is or.
No. Schedule 3 does not say or.
Or and. Since it's an afternoon session, we want always a two-way communication rather than one-way communication. And.
It is and only,
And.
it is not or. But practically, either that can be a profit or that can be a loss. Both cannot be there simultaneously. That is my point.
For certain companies it can be profit, for certain companies it can be a loss. That is why both wordings are there. Statement of profit and loss. So, for the same company you can't have both profit and loss. For certain companies it will be statement of profit, for certain companies it will be statement of loss. But the heading is a statement of profit and loss.
Good. Yeah. So one single statement can have profit also, can have loss also. When we get into profit and loss account line items, we will see there. At some line items it will be profit. Then at some other line item it can be loss also. So single statement will be reporting about profit as well as loss. Though a company might have made in the ultimate analysis loss or profit, statement will comprise of all these aspects. That's why it is statement of profit and loss. Good.
Yes, sir. If you observe this definition, it is an inclusive definition. So whenever we are preparing interim financial statement, you have to prepare in accordance with Schedule 3 only, because it is an inclusive definition. So this is all about finance statement definition. Why we should prepare financial statement for each and every company in India in Schedule 3 format? This is the answer. All companies has to prepare financial statement mandatorily in Schedule 3 format as required under section 129 subsection 1. There are 3 conditions are there. It should disclose, financial statement should disclose true and fair view. It should comply accounting standards, and it should be prepared in accordance with the Schedule 3 format. Because of this mandatory requirement of section 129 subsection 1, every company has to prepare balance sheet or profit and loss account or notes accounts or cash flow statement in accordance with Schedule 3. This is the deriving section for financial statement preparation for each and every companies in India. If you go through this balance sheet, after this section 240 and the next one is Schedule 3, next one we are discussing about what are all the signing requirements for finance statement. Who has to sign the finance statement? And there are some intricacies are there. I think Sajivan sir is also there. We want his input also as a regulator's point of view, because there are some, after this COVID, people are signing through digital signature, whether it is valid or not valid. One director is sitting in India or one director sitting in Germany, and whether same day, same place, same day at different places, different countries, people are digitally signing the balance sheet, whether it is valid. There are some discussions are there. We will discuss. These are all the basic things. I think everyone will aware of this one. Chairperson of the company, if authorized by the board, can sign the financial statement, or at least 2 directors should sign the balance sheet, one of whom should be MD, if any, or whole-time director or CEO, if any, and chief financial officer, if it is if appointed by the company, company secretary if appointed, and obviously statutory auditor has to sign the balance sheet mandatory. These are all the persons who has to sign the balance sheet, financial statement for the respective years. Sir, if you want to add anything, you can add, sir.
Well, I can understand director signing or chairman signing when authorized by the board. CFO is there. Company secretary is signing for what purpose?
We will leave it to the audience, sir. What is his responsibility in case of false statement?
Company secretary, when he puts the signature on the financial statements, does she have the responsibility for any misstatement in the balance sheet or profit and loss account, or some errors in the figures, etc.? Sorry? Only authentication.
No liability in case of misstatement or non-disclosures.
It's not for authentication alone. Sir, company secretary as a CFO and the directors are there. Should I start over?
No, sir. Please. Go. Nagaraj, you can hand over mic. No, sir. Sir, you can be seated, sir. Till 8 o'clock, or till up to 8 o'clock, it is there, sir.
I don't know that whether I am the registrar. I was a registrar of companies and official liquidator. My learned chairman, that one chairperson, Devika, introduced region director. Maybe people are thinking that I am the region director of the Institute of Company Secretaries of India. I don't know. Okay. As far as this question is concerned, that one, first of all, company secretary is the key manager person as far as section 260 as well as 203 of the Companies Act. Now, taking care of the finance statement, there is a director, there is a managing director, one managing director, and one director has to be signed the finance statement. And now question comes, there is a CEO, of course he has to sign it. He has to take responsibility of the finance statement. Then there is a CFO, of course he will take the data or the quantitative information about the company. Now about the disclosure. So many disclosures are there, whether it is the director's report or the finance statement or each and everything, there is disclosure. Even the share capital, if you see that there is a serially, it has to be done, what are the things to be done, things to be disclosed. For that purpose, maybe the legislators thought that one, there should, if there is a company secretary, she has to take or he has to take responsibility. In case of any violation, obviously, it's not the ornamental signature. Obviously, she or he will be the officers in default. Thank you.
Vijay, we had that case law, no, where SAT has decided.
There is one case law, I think, sir, Supreme Court has referred, there is one case law called V. Shankar versus SEBI.
Yeah.
There is some disclosures, the false disclosures in the buyback regulations and something like that. And whole-time director has stated that company secretary has to be punished for false disclosure. Then whole-time director order has been challenged in the SAT, and SAT has stated that it is a false statement. Again, it went to Supreme Court, and Supreme Court has again referred back to this case to the SAT, sir. Still it is under, as of yesterday night at 11 o'clock, I checked that what is the status of the case. Still it is under, I think it's reserved for order now.
That's all right, but till now, whatever orders were made before going in appeal, etc., they said that company secretary as somebody mentioned here, is signing only for authenticating that the documents are not fake. They are genuinely signed by the director, CFO, etc. That's why company secretary has also signed it. Now, yeah, no other responsibilities on company secretary, except certifying that it is authentic document. About 2 weeks back, in one of the companies where I am the advisor, company secretary called me and said, sir, financial statements are all signed. I asked her, you have signed? Yes, sir. Oh, on what basis you have signed? The reply was, all the directors have signed. CFO has also signed. I have signed. Okay. Now, the statement that company secretary is signing for the purpose of authenticating that it is not a fake, that means is company secretary the witness for the signature of the directors and CFO, etc.? No, cannot be. So that position of law is not proper. What is your opinion?
Sir, in the year 1970, I think Sajivan sir may agree, Ministry has issued a circular stating that company secretary is not signing in personal capacity, is signing on behalf of board of directors. What is the validity of that circular under New Companies Act 2013?
On behalf of board of directors, directors are signing, no? Yeah.
The circular clarifies this sentence, on behalf of board of directors, not in personal capacity. That's why any misstatement in financial statement is responsible as per ministry circular issued in the year 1970.
Now, let me invite your attention to provisions of section 205, responsibilities of company secretary. It talks about A, B, C. First one is reporting to the board of directors about compliance with the provisions of the Companies Act, rules and other laws applicable to the company. Company secretary, even if the person is not signing the financial statements, that responsibility is there. One has to take it. Now, the financial statements is again part of the compliance with so many provisions of the Companies Act. Section 129, Schedule 3, etc., etc. Company secretary is responsible for that. Am I right? So, Mr. Sajivan's point, I agree that for the amounts mentioned in the profit and loss account or balance sheet, in case where CFO is there, Director of Finance is there, or a designated person by the board is there to prepare the finance statements, etc. In case they are there, company secretary's responsibility is not there. Certifying the correctness of the figures in the balance sheet, profit and loss account and the schedules, etc. Other aspects which are more related to disclosures in compliance with various Companies Act provisions, company secretary's responsibility is very much there.
Please,
Yeah.
sir. Please, sir. As I said, that managing director, CFO, CEO, and the company secretary, as per the requirement of law.
Yeah.
So you cannot say that one, okay, certain elements, certain pages only the company secretary responsible. Let us say that page, instead of pages disclosure, and the quantitative details only the CFO will be responsible. Sir, as far as my experience is concerned, since he is a company secretary, is a office on default, as well as the KMP, that if a person signs the document, she or he has to take responsibility of it. And that my experience in the court also, we succeeded in the court of law, saying that we made them as a party, as a company secretary for non-compliance of whatever it is in the financial statement, about 129, whatever it is there. And court agrees that one, okay, she's a signature, he's a signature. So she has to take responsibility. That's what I said purposefully, sir. It's not an ornamental signature.
she or he is taking responsibility of the financial statement, yes, this is what it is. That's what my opinion. Thank you.
Good.
Sir, there are some few. Yes, please go ahead. Next question is there still. Picture abhi baki hai. We are not yet concluded. Yes, sir. There are some practical issues we can discuss. Whether auditor can sign balance sheet and directors can sign balance sheet on same day. Without, how can they sign on same day without doing the audit? Whether they can conclude the audit within a fraction of second or fraction of minutes. Because normally few companies are having a practice of first director, what is the sequence of approval of the board balance sheet is first audit committee, wherever audit committee is there, audit committee will approve it and recommend it to the board. Then board will approve it and they will submit to the statutory auditors, and statutory auditor will audit it and they will submit back to the company. And then again audit committee will be held under 177 for examination of audit report, and thereafter they will recommend it to the board. And the board will approve the board of directors report along with the qualifications, if any, on the auditor's report. They will remark it, they will give a comment, and thereafter in case of government company it will be sent to the C&AG for audit, and thereafter AGM will be conducted. Whether all this activity can be conducted in one day.
Why not? Board of directors approve the accounts. First sequence he mentioned, in that sequence, first activity. Board of directors approve the accounts and present it to the auditor for audit. Your answer of why not? Same day audit can be completed, and auditor can sign it. Then it comes back, audit committee again goes into auditor's report, board again gets into the auditor's report. They have to give their responses to any qualifications in the auditor's report, etc. All this will have to happen. Is it practically possible to complete all these activities in a single day? That is the question.
How do you record in the minutes agenda? Practical side. So we are holding two board meetings, or we are adjourning the first board meeting and we are...
We will break for the lunch, and after that the auditor will sign next time.
Bid is open, anybody can bid. Dwarkanath sir is saying you can continuously, you can conduct and hold a meeting and continuously can...
So figures are available. So once the director signs the financials, it will be given to the auditors, because that is the process. Then the auditor will give his report. As you said, yes, if there is a remark by the auditor, that has to be suitably answered by the board of directors whenever there is a qualification. There ends the matter.
So another board meeting.
No, not board, same board meeting. Why second board meeting is required?
So till auditor signs and gives it back, what they will do, directors?
Fine. They can consider any other matter. Why they should stick
Any
to
other matter, he has mentioned lunch only. There is no other agenda.
No. There can be any other. Okay, they can postpone it for few hours. Better is to take up other matter. Then once the auditor's report is ready, that can be considered. Not an issue at all.
The aspect of can the auditor do the audit in a single day, that is answered by Mr. Dwarkanath appropriately. Auditor has not started the audit only on the day of the board meeting when they approve the accounts and sign it. No. Auditor has already done the audit. Okay. There are some practices where draft audit report is also discussed in the board. Draft audit report. That means audit is almost done. This is another dimension to the whole subject.
In this regard, Ministry of Corporate Affairs under old law has issued one circular and clarified that it can be done in single meeting only. So there is a clarification under old law issued by the Ministry of Corporate Affairs. No lunch break, sir.
On.
After this COVID, we are holding, in case of MNC companies, there will be 2 directors, 1 resident directorship compulsory, he will be there in India, and another there will be in outside India. How do we sign the balance sheet on same day at different places? Whether if it is they are signing by through digital signature, whether digital signatures, signing by digital signature, whether it is valid, and signing at the same day at a different country, whether it is valid. So,
Signing by DSC is valid. Signing in different countries also valid. It can be signed on the same day or next day also. It is also valid.
we will ask the members also, sir, because there are some adjudication orders in this regard.
Yeah. Any other view?
Whether first question, whether digital signature, signing by digital signature is valid. Yes. We will come back, sir. We will come back.
So digital signature which is generated and complied with Information Technology Act, that is only valid.
Okay.
Means asymmetric crypto system. That system is there for private key and public key. So the combination of keys when they work, then those are called as digital signatures. So our understanding, like DocuSign, I feel that it doesn't qualify that particular the test.
Okay. Any other answer, different answers? Section 402 of the Companies Act 2013 states Information Technology Act is applicable for the Companies Act 2013 provisions. So IT Act is applicable for all the provisions of the Companies Act to the extent whatever specified in this one. And companies, offices and fees rules. There is some rule number 8 or something rule is there. It says information technology, digital signature, signing by digital signature or electronic record is valid under the provisions of Companies Act 2013. And if you go back to this Information Technology Act Schedule number 2, only 2 digital signature, electronic signature is authenticated or recognized under the law, under Information Technology Act. One is Aadhaar-based KYC, another one digital signature as recognized under Information Technology Act, because in the PDF also I think we can generate some digital signatures. It is not valid as per Information Technology Act. So there are 2 recognized electronic signature allowed under IT Act. One is, I repeat, Aadhaar-based eKYC, then another one digital signature. Only 2. Your answer is answered already in this question only. Schedule 2 of the Information Technology Act. Read with section 402, read with companies, registration officers and fees rules, and it is valid in the court of law also under Indian Evidence Act. There are some few sections are there. Under Indian Evidence Act, it is valid under Indian Evidence Act and before the court of law also. This is first question.
Yeah.
Different countries and same.
Sir, continuing with this particular question itself, I have a question. So the people say that when a digital signature is affixed to the financial statement, it is valid, and digital signatures, all the people affix, they affix and give it to auditor. Auditor will also sign. And then when you print it, and that printout is not valid. So that is what
because you cannot validate it. Because everything should come in a tick mark, or you cannot validate in the printout.
The
Sir
printout
is having some.
The printout is coming with the right tick, yes. Then also when the document which is there in like whatever electronic format, only then that is valid, IT signature.
Hard copy
of digitally signed document, when it is been printed, then it is not valid. So that view was also there in the market. So any thoughts on that?
See, yeah.
I think some.
A follow-on question on the same thing.
I will clarify to first floor and second floors.
Yeah, please.
Because they may not be here Madam's voice. They are, Madam is telling that the hard copy of a digitally signed document should be accompanied by one certificate saying that when it is printed, how it is printed, what is the document, some basic details, and you can sign it manually. Then it is a valid as per IT Act. Correct, Madam, or whatever?
One minute.
Okay, okay.
Yeah.
Yes, sir. Go ahead, sir.
The original document which is bearing that digital signature, where is it being submitted? This printed is for what purpose? The question. For the purpose of filing with ROC or the income tax, etc., it is a scanned document that we are filing it. It is scanned document, we are filing it. For other purposes, look at the annual report of any company. No document bears the original signature there. It's all SD. Period. In the printed, so-called printed document, no signature need to be there. Either trace of DSC or by ink signing. It is not required at all. Move on.
Okay. Next question. Whether same day, whether director can sign in India, one director, and another director can sign outside India on same day by mentioning a place as India, Bangalore, and Germany, something place at Germany and same day. ROC Chennai, there is an adjudication order. In adjudication order, he stated that it is a violation of section 134 because it is signed in different country. Some adjudication order is there, sir, in ROC Chennai, issued by ROC Chennai.
That order will not stand the test of law. One can sign from any corner of the world.
Yes. Sorry?
Correct.
Okay.
Correct.
Okay.
That is the correct position. No? Yeah.
Yes, sir. Sir has stated one. Yes, sir. Please go ahead.
Is it valid?
Valid. It is valid.
Is it? Okay.
Madam, you have a point.
No, I had a question actually, but
Question is also welcome.
I had a question that, let's say the director is in Germany, right? And what we will do is the DSCs will not work in their German laptops. So we are holding the DSCs here. So we send an email approval. Can we please apply your DSC? They give yes. Then we apply DSC, right? Where has it been signed? India or Germany?
India only.
Good.
India only, sir.
Huh?
India only.
DSC is here, but the person has sat in Germany
person
or
is not
UK.
in India at all.
Exactly.
That is the question.
Yes. So
Without technology allowed from Germany, we can access laptop in India and sign it. We only think it in that way.
So the place of signing, you will have to mention Germany only.
that's what we are doing.
Yeah.
But I always, because this is a question that I'm also a little curious to know if there's any judgment or any adjudication
Sir,
around
if you
this.
say Germany, in case of incorporation of a company, if you place of signing is Germany, then what about apostolization and notarization concept? I am deviating from financial statement to incorporation document.
That is a different context. That is different context. Coming back to this, madam, the place of signature shall be Germany only.
Yeah.
Okay. Though you are affixing the DSC here on authorization.
Yes.
But in practice, nobody authorizes anybody, everybody can fix a DSC. That is a different subject. That is a different subject. And as per law, sorry to make the statement, it can be called as forgery. Because I do not have authorization from a particular director, but in my office there are
500,000.
DSCs available. My assistant affixes it over. But we are all happy. We are complying with law. Move on. Next slide.
Yes, sir.
There are some tools in the market. They claim that their signatory options comply with the Information Technology Act.
I already answered Schedule 2 to the Information Technology Act recognize only two types of digital signatures, electronic signatures.
Okay.
Other than this, no other validity.
Okay.
If you go and read that Schedule 2, then you can understand.
Yeah.
Okay.
Next.
Then, sir, you have mentioned that director can, to board meeting conducted today, one director can sign today and another director can sign next day also.
Yeah.
But what is the MGT 14 day, or MGT 14, what date we can mention before the ROC for filing resolution for approval of the balance sheet? But board meeting date will be today's date. Whether we are mentioning today's date or we put it in simple, whether board director signing date is a board meeting date or whenever director is signing the date.
Let me clarify.
Yes, sir.
Approval has happened during the course of the board meeting. Today it has happened.
Correct.
Approval of the accounts by the board. Done. Same board authorizes directors to sign it. Not necessary directors should sign that day only. They can sign next day also.
Next day also.
Yeah.
Okay.
Next day also, after a week also.
Yes, sir.
But the date of the signing financials will be the date of board meeting.
No.
That only I am asking. That is the question.
In which case, auditor's report should be subsequent to the later director's.
Fine. That is fine, no? It is not mandatory that auditor's report should be dated same board meeting date. It is not mandatory. See, practically we are doing it on the same day. That is different. Again, look at the sequence. Board approves today. It authorizes the director to sign it. Not necessary director should sign that day only. It is not necessary. They can sign it. So, yeah, sir has mentioned there that the last director signature, whatever is the date, that is the date of signing the financial statement by the directors.
Sir, but that day board meeting may not be there on that particular day.
Board meeting is over in the past already.
But it is a different date, whether it is valid under law.
I said it is valid. It is valid.
Sir, same question I am asking.
I have answered it.
Whenever directors are signing.
I can repeat my answer. Board meeting takes place today. Board approves the accounts. Resolutions are passed. Company secretary has given the certified copy of resolution. Over. Board authorizes the directors to sign the financial statements. Director can sign tomorrow. They can sign day after tomorrow. Whenever they sign, they will put the date of their signing. If somebody is in Germany, they may sign after 3 days also. It is all fine.
There are some different views are there.
No.
Because the date of signing should be the date of board meeting only.
No. Views.
Or we need to have the auditor's report after the last, the signature of the last director.
Absolutely, that is how it is. Only when signed by all the directors, the CEO or CFO, the document is given to the auditor, auditor's report question will arise. Till then, no, auditor's report cannot be there.
Sir, practically, financial statement when it is sent to the directors, it will be pre-dated as a board meeting date.
You are doing it by practice, sir. We are talking about legal position. Date of signing and the last director signature date, that is the date that will have to appear. Sir, you have made a statement, I agree with that.
Yes, sir. Next one, sir.
Now, in filing NGT 7 and EOC 4, we'll have to mention date of signing the this one. There we'll have to mention two different dates.
What two different dates?
Means one director would have signed today.
Sir, in the AOC 4, there is a column called date of signing.
One minute. 1 minute, let him complete the question. Let us not.
So the date of signing the this one financial statement or board's report. So one director would have signed today. The second director would have signed 2 days after. So different dates has to be mentioned.
We just now I have concluded last date, the signature by the director after 2 days you said no, that is the date to be taken.
But practically the director have signed today. One director.
One director is not complete, no. For completing the signing, other director has to sign it. That is the second date after 2 days. That is the date that will have to appear in your forms. Okay.
Board meeting date.
Okay.
Subsequently, who has the sign date?
Date
Okay, there we need to mention the director name and their designation and the date of signing and place.
Yes.
So, if we mention the date before board meeting date, then the form will give the error.
Before
No.
board meeting date?
Before board meeting date, it is not possible.
Clarifying it. He is
I am clarifying.
clarifying it.
If we mention the same board meeting date or after subsequent to board meeting date, if we mention, the form will accept. If we mention before board meeting date, then it will give the error message.
Correct.
This is the form is created, sir.
The form is
Designed. As per
designed
your
to
views.
comply with law only.
Yes.
As per your view.
As per my view. Okay. He says form is designed as per my view. Okay. Yeah. Good.
Sir, next question. I stated chairperson board can authorize a chairperson. There are two types of chairperson. One is chairperson for the meeting, chairperson of the company. Whether chairperson of the meeting can sign the financial statement. If it is authorized by the board. The question is whether it is the chairperson of the company or chairperson of that particular meeting where balance sheet is approved.
1 minute. In the question itself, I have a question. Chairperson of the meeting, I understand. Chairperson of the board, I know. What is the chairperson of the company? See, when
So one and same only, sir. Chairperson of the company, chairperson of the board. But the section uses the word chairperson of the company. That's why I am using the word company only.
Okay. Now your question, who has to sign it? The authorization specifies. We talked about authorization, no?
Section 134, so chairman of the company, not chairman of the particular meeting. Because some companies do not have a habit of appointing chairman of the board or chairman of the company. They will elect the chairman for particular meeting itself, meeting specific. So in that situation, chairman of the board, as per my view, cannot be authorized to sign the balance sheet. Only chairperson of the board, chairperson of the company if appointed by the board. Not meeting specific chairman. That is. And this after this COVID and all, we are working overnight sometimes. And we are, I think 12 o'clock, 12:30 also, we are signing the balance sheet digitally. This recently one Delhi High Court judgment is there. Income Tax Department has issued on show cause notice for, I think every show cause notice or something they have to issue before end of the financial year. They started working from morning to till midnight, 1 o'clock or 2 o'clock. They started typing this letter. Letter date is 31st March. Digital signature, if you click on the properties, it is a digital signature timing, it will come with hour, minute, time. The digital signature timing is 12 o'clock 2 minutes. That letter date is 31st March. Whether it is it went to Delhi High Court and ICSI is challenging that this notice itself is invalid because department do not have a power to issue after 31st March because 12 o'clock 2 minutes is 1st April. 12 o'clock, 11 o'clock 59 minutes is 31st March. Whether it is valid show cause notice or invalid show cause notice. Delhi High Court stated that 12 o'clock 2 minutes, it is next day, even though your letter is dated 31st March. So be careful while signing digital signature, at least change the system date half record.
Oh, you have given the solution also for that. There could be another solution. You follow the Bharat Panchanga. you follow Bharata Panchanga, here the days are from sunrise to sunrise, not midnight. Nam Panchangdalli, days are from sunrise to sunrise. Okay.
We specifically kept this slide in this third or fourth to avoid this afternoon, after lunch sleeping, because some people may be having a habit of sleeping by opening their eyes also, sir.
No, not on Thursday. It is only Saturday, Sunday.
Saturday, Sunday. This also we discussed already. What is the responsibility of the company secretary while signing the balance sheet? Yes. Next question. Why company secretary has to understand the financial statement? Because financial statement is domain knowledge of the chartered accountant. Why you should study? So first one, company secretary, already we discussed 134 company secretary signing the balance sheet. What is his liability, responsibility, we already discussed it. Second point, compliance with Schedule 3 disclosures, we already discussed at this point. And when it comes to practicing company secretaries, they have to issue MGT8 certificate saying that around 22 clauses are there, they have to certify those 22 clauses. And MGT7 signing section 92(1), there is one column called whether all provisions of the companies are certified, yes or no. So for that purpose, you should understand what are all the compliances as per the balance sheet. You can understand what are all the compliances needs to be done. And second one, next question, next the MR3 secretarial audit report, you have to specify whether all the projects of the companies at 2013 is complied or not. And ROC is issuing technical scrutiny show cause notices for balance sheet disclosures. Before replying for the show cause notices, you should understand ourselves what is the what's supposed to be disclosed and what is the disclosure by the company and what's supposed to be disclosed by the company. You should understand so that you can give a suitable reply to the ROC. If there is a actual disclosure is not there in the balance sheet, then you have to go for adjudication or compounding as the case may be. So that for drafting the compounding application or adjudication application, we should have a knowledge of Schedule 3. These are all the things to understand company secretary, why company secretary has to understand the financial statement. You can add few more this one.
Today's Economic Times front page says SEBI has issued show cause notice to 5 senior professionals of IndusInd Bank. UPSI, unpublished price sensitive information. Those 5 executives have had transactions worth crores in the shares of IndusInd Bank. Now, we talk about SDD, all those things.
Structural database.
The company secretary of that bank, if the company secretary has to know which are all the UPSIs, unpublished price sensitive information, for understanding that, one will have to have the knowledge of financial statements. If that understanding was not there, then 1,600 crore rupees non-disclosed liability on account of same IndusInd Bank story will happen.
Obviously.
Yeah.
So this is the reason why we are committee members and chairperson has scheduled this topic, and this is a year end. So it is a more apt for all the members to understand the financial statement, and it is appropriate time to understand because we are in a fag end of the year. Okay. Who are all the users of the financial statement? One, as a owner, investor, what and all owner or investor should understand the financial statement. As a creditor, as a management, as an academician, what he should know in the financial statement. So these are all the users of the financial statement. These are all the people who are interested in financial statements. Sir, if you want to add anything, you can.
Yeah, when we say owners or investors, it is promoters, the institutional investors in case of listed companies, retail investors, all those class of investors.
If those owners or these persons are not aware of the basics of the financial statement, they will approach first chartered accountant or company secretaries. So before that, we should understand what is the content of the balance sheet so that we can guide these persons interested in the financial statement.
Yeah, when we say creditors, it is the banks, the financial institutions, even the vendors. There is a process of evaluation of the customer. Then they will have to understand the financial strength of the company. I have seen in few companies, the company secretary is in charge of vendor evaluation and customer evaluation, because they expect company secretaries to know better about evaluating the financial health of that company, looking at the compliances or non-compliances of the company. That's why they are in charge of vendor evaluation and customer evaluation, company secretaries. Now, to carry out that responsibility, one should have a fair understanding of the financial statements, should be able to analyze it.
Nagaraj, you can hand over mic. Competitors will download your balance sheet, view public document, and they can study this, all these financial statements.
Yeah.
Agreed, sir.
That's right.
Yes. Schedule 3 is divided into 3 divisions. One is non-Ind AS, Ind AS, and NBFC. Today we are dealing only dealing with division 1 only. We are not dealing with the division 2, division 3 and all. Division 1 only.
Division 1 is Ind AS complying companies. See, the basic concepts of the line items in the balance sheet or profit and loss account, it is not that different from
more or less concept is
non-Ind AS or Ind AS or NBFC. That's why our analysis will be confined to division 1. There is a typographical error. Excuse us for that. General instructions, it should be plural. Next.
There are 3 parts: the division 1, division 2, division 3. Division 1 talks about non-Ind AS, Ind AS, then NBFC following Ind AS. Under division 1, there are 5 parts are there. First part is general instructions for preparation of balance sheet and statement of profit and loss. Part 1, balance sheet. Part 2, statement of profit and loss. General instructions for preparation of, it is a P&L accounts or typographic error. Then general instruction for preparation of consolidated financial statements. So these are all the 5 parts we are going to deal with in next another 3-4 hours. Schedule 3 is not applicable to insurance companies, banking companies, electricity companies, any other companies as may be prescribed. But however, electricity companies, there is no specific format under Electricity Act. So all electricity companies are following Schedule 3 only as of now. Schedule 3 is a minimum disclosure. If you want to add few more disclosures, you can have additional disclosures. It is only minimum. And whatever informations, additional disclosures are there, you can disclose either on the face of the balance sheet wherever required, or in the notes accounts to the financial statement. You can have either way. Another question I am having, wherever many companies are there, Schedule 3 is a 30-page, 40-page booklet will be there. Wherever not applicable is there, 0 is there, can we delete and can we retain only line items or whatever items required under for the specific company? Can we remove items from the schedule that are not applicable to the specific company? That is my question to the audience.
Not applicable means what? Figure is 0.
Figure is 0.
Now, there are 2 aspects to your question. One is on the face of the balance sheet or profit and loss account. Other one is on the notes.
Notes. Both I am asking, sir.
Okay.
or whether even if a zero is there, we should have that line item or notes accounts.
When the value is 0, should it be retained? Yeah?
Format is to be. But Nagaraj, you can hand over mic.
Section 129 read with the schedule 3. Division 1, we are talking about only division 1. So there is a format, first balance sheet, there is a format is there, how it is. So suppose is there an extraordinary item. You cannot simply ignore it, you cannot delete it, because the reader may not be knowing there whether there is an extraordinary item or not. So it has to be written extraordinary item, see the profit or net profit or whatever it is there. If it is not there, put a dash on it and complete it and come down to line items. That's what my opinion.
So on the face of the balance sheet or either in the notes also?
No, it is in the format. The first page balance sheet, there is a notes is different.
Okay.
The first page itself, there is a format balance sheet prescribed. That is to maintain it. And if there is nothing, is there, put a dash on it.
Okay. But if practically few balance sheets we are seeing wherever not applicable is there, they are deleting it and they are retaining wherever amounts are there. This is the practicality. And another one, can we add subtotal or subschedule in the on the face of the balance sheet itself? Subschedule or subtotaling. Adding to Sajivan sir clarifications. I want subtotaling in this on the face of the balance sheet.
You mean to say that you will delete all the schedules and include it in the balance sheet straight away?
No, not exactly.
Right.
Not exactly. I will explain it. Balance sheet, on the face of it, there are 5 main items. First one is equity and shareholders fund. Non-current liabilities, second one. Current liabilities, third one. Fourth one is non-current assets. Fifth one is current assets. 5 major headings. Now the question is, under each one of them, we will have 3, 4, 5 sub line items coming there. Now, these 3, 4, 5 sub items total in a, one can put there and take only the final total to the amount column. That is one option, outer column. Non-current liabilities. Under that we may have 5 line items. Add up the figures of all the 5 and bring that one figure against non-current liabilities. That is what is totaling up. Am I right?
Yes, sir. Whether it is
other way is non-current liabilities, against that heading there is no amount at all. Against each line item amounts are mentioned. That is another way of presenting it.
I think that is too far-fetched to do it. I think practically it may not be very convenient to do that.
To do what?
Subtotaling or
Subtotaling at the face of the balance sheet. And where do you show the
few
schedule
companies
items?
are following it, sir. Few companies are following subtotaling. Whether it is allowed under Schedule 3.
See,
I think it should be allowed. There's no specific law prohibiting that kind of presentation.
We will move on, sir.
Yeah,
It is allowed.
Mr. Kedarnath, it is allowed. There is no second opinion.
Yes, sir. Next question is, this SME listed companies, whether they should follow non-Ind AS balance sheet or Ind AS balance sheet, is my next question.
Listed SMEs.
Or all listed companies has to follow Ind AS, whether it is a SME listed company or main bed listed company. Any other answers?
No, his point is SME, listed SME.
Sir, listed companies other than main board listed companies, there is no second thought about it. I am asking about SME listed companies.
Main board listed companies, sir, for your observation, main board listed companies, even if the net worth is less than whatever threshold you have mentioned, they have to follow Ind AS. There is no option.
There is no option, correct.
That net worth criteria is not applicable there. they have to follow Ind AS.
Irrespective of net worth.
Yeah, irrespective of net worth. Listed companies. Unlisted, that criteria applies.
250 crore, 500
Yeah.
crore.
Now, listed SME, that is his question. Any response?
Please go ahead, sir. You are SME IPO consultant for many companies.
SME, listed SME, Ind AS is not mandatory.
How come, sir? Because everywhere it says all listed companies has to follow Ind AS.
All listed companies, then there is a statement that SMEs are exempted. As simple as that. Yeah. There is a clear provision.
There is a Ministry of Corporate Affairs circular in this regard. SME IPO companies or SME listed companies need not follow Ind AS balance sheet. They can follow normal non-Ind AS balance sheet. There is a Ministry of Corporate Affairs circular in this regard. Irrespective of net worth.
Irrespective of net worth. Yeah. But will it satisfy?
Migration.
Will it satisfy to be classified as SME? That is different question.
Automatic migration issue will come.
Now, automatic migration will happen not because of net worth, because of paid up capital.
25 crore paid up capital.
25 crore paid up capital. Migration to main board will happen. Paid up capital being less than 25 crore also, they can have 250 crore net worth and remain SME. No need for Ind AS.
For another short while, sir. Because SEBI is going to change this SME IPO criteria in near future.
Yeah.
This is a rounding off concept. Now earlier they stated something else and now it is amended to total income. Rounding off less than 100 crore total income, more than 100 crore total income. Now there is no concept called a 10 rupee rounding off. It is a more less than 100 crore, 100 starts with 100. More than 100 crore, it starts with lakhs, not 100. I think 3-4 years back when this amendment came, I got on balance sheet from the auditor, rounding off. Rounding off means he has rounded off 9,996. Rounding off means he has rounded off to 9.9996 or 1,000 rupees he has rounded off. Something like that he has stated. Instead of stating 9,996, as per his understanding of rounding off, he has stated rounded off to 1,000. I think above 5 we are rounding off to 10, below 5 we are rounding off to below 1 rupee, something like that. He has rounded off. Whether the concept of rounding off is concept of this rounding off to next number or concept of this rounding off refers to this decimals.
This rounding off, Excel sheet will give one figure.
Actual.
Calculator will give different figure. Have you experienced it? Now which one should be taken? Excel sheet or the calculator?
And whether we should round off without decimal or with decimal, it is mandatory. Another question. Whether decimal is mandatory or decimal, whether we can ignore decimal and we can round off. You can ignore decimals. Because the wording in the Schedule 3, it says, or decimals thereof.
Yeah.
So whether decimal is mandatory or we can ignore decimals and you can put 00, 0.00. Whereas we are preparing a rounding off balance sheet and where we are asking for AOC4 alone, we are asking auditors share the Excel sheet in actual numbers. This is a practical difficulty we are following while
That
filing.
is something funny.
Still AOC4 yet to be revised, sir.
Yeah, form needs to be revised. Form need to be revised, yeah.
But it is whereas in case of ex-barrel there is no issues, but only in case of non-ex-barrel companies this issue we are facing it.
Yeah.
And auditors are saying, sir, no, there is no actual balance sheet itself. We are rounded off directly in the balance sheet itself. There is no rounding off. And few people has to rounding off by using this into 1,000 or into 100 or whatever it may be. It may not be the actual numbers. It may be into 1,000 or into 100 or something. same unit of measurement in all financial statement. It means if you are rounding off 100, it should be 100 rounding off should be there everywhere, entire financial statement. In first page 100 rupee round off, second page 10 rupee round off, third page lakhs rupees round off, it is not allowed. Unit of measurement should be there, entire financial statement. Whereas this concept of rounding off is applicable for Schedule 3 balance sheet or financial statements as per section 240. It contains 5 elements: balance sheet, P&L, cash flow, notes of accounts and changes in account. What about board report? The board report in first point itself we are mentioning summary of financial highlights. In AOC 1 we are mentioning about subsidiary related informations, their turnover details, their capital details. In AOC 2 we are mentioning about related party transactions. CSR annexure we are having all the CSR related expenditure list, all 2% calculation, average calculation, whether it should be rounded off or whether it can be actuals, or financial statement rounding off as per the Schedule 3. Others, whatever we want we can do. What is the practice we have to follow practically? So few members are telling standard, whatever financial statement is there, same value you can, but few people are following actual figures in the board report or AOC 1 or AOC 2 or CS annexure, wherever applicable. CSR 2, it is a E-form, sir. We are talking about CSR annexure to the board report. Which one you have to follow practically?
Uniform unit of measurement.
Uniform unit of measurement, it's Schedule 3, sir. The Schedule 3 is applicable for only for section 2, section 40 contents, for 5 elements. But it does not contain board report, annexures, other things.
I am not talking law. I am advising that let it be uniform in all the documents, all the
entire
reports.
Annual report.
Yeah.
You are giving with a disclaimer in a relevant paragraph. Disclosures requirements are supplementary, do not replace accounting standard. Normally we are saying generally law will prevail over all. But when it comes to the Schedule 3, accounting standards will prevail over Schedule 3. Whatever, if any conflict between Schedule 3 disclosures and accounting standard disclosures, normally general rule is law will prevail over. But in Schedule 3, accounting standard will prevail over Schedule 3. This is the peculiarity of this Schedule 3 and accounting standard. And whatever terms or definitions provided under accounting standard, same definition is applicable for Schedule 3 also. I think we are taking a printout of balance sheet, whether it should be on the letterhead or it can be on plain paper. Top of it, whether it should contain whatever section 12 requirements. Section 12 says, section 12 subsection 2 or 3 says name of the company. In case of change of name, you should use former name for another 2 years. Then it should contain registered office address, email ID, phone number, whatever, SIN number, whatever. Whether it should contain all details as per section 12 or whether it should contain only name, or if name is there, that is fine. As per section 12 you are saying, whatever specified in the section 12. Then in the bottom signatory is there, in next question is signatory. First we will talk about top section of the printout.
Sir, because the auditor will certify and sign also that this is the company, this is the SIN number, the address of the company, the former name of the company. So he will certify the financial statements of that company. So that is why full details of the company is required, sir.
Any other different answers? Our Sajivan sir says it need not contain section 12. No, at least first page should take.
AGM is convenient, notice is issued, there we will have to mention everything as per the section 12. But the balance sheet and all these are first page, obviously we will give that okay, name of the company, plus in of course, then directors, KMP, company secretary, bank and all these basic things. Remaining one, I don't think so, it required that all these fax numbers, number and all these things. That's what it has been said. You see any balance sheet.
On face of balance sheet, it should contain section 12 requirements. Other schedules and all, it did not contain section 12, only if it contains name of the company or something, it is sufficient. So this is the view. Again, sir. Funny is saying, whatever we supplied some balance sheet, SIN number is not there.
Good, when we take up discussion on those papers, then we will discuss this also, and the company secretary of that company will have to be issued a show cause notice.
And now when come bottom side signature part, we already discussed whether along with signature, whether it should contain DIN number, designation and address as per the DIN, is it mandatory or not, or only the name, designation, DIN number is alone sufficient, or address as per the DIN is also mandatory. But many balance sheet do not contain address.
DIN number is sufficient.
DIN number is sufficient.
Name, designation, DIN number.
Name, designation, DIN number. But if you refer rule number 7, provision number 5 to the company's registration of office and fees rules, it says whatever document you are filing, correspondence or document if you are filing before ROC, it should contain name, designation, address. In case of professional membership number also it should contain. Provision number 5 to the rule number 7 to the company's registration of office and fees rules, correspondence or document. If you come back to this 2 subsection 36 document definition, it is an inclusive definition. Now I am asking whether we should mandatory or not mandatory.
I catch one point you mentioned there. If it is not DIN number, membership number of the professional has to be there. In case of, say, for example, CFO, he is a chartered accountant. He does not have DIN. Then where he signs financial statements, his membership number should be there. Company secretary signature, company secretary's membership number should be there. DIN number is not there because she is not a director there.
I am leaving it to the audience only, sir. Sir, I will leave it to you only, sir, Central Council member. No, many companies are not following, but whether document includes financial statement. Since it is an inclusive definition, whether document includes financial statement, because rule number 7, provision number says any document or correspondence. We are coming back to this first part of the section 2, subsection 40, balance sheet. Sir, if you want to add anything, your first part, balance sheet, you can.
Yeah. Very interesting phase of our discussion now. I said there are 5 main headings on the face of the balance sheet. 3 are here, 2 are under assets. Each one of the line item, say share capital, reserves and surplus, then other line items. We are going to have a number of slides getting into the details, the description, the legal provisions, then how it should be presented in the notes, etc. We are getting into it. As has been the case in the last nearly 2 hours now, I invite you, each one of you, to participate in the discussion, share your views. There can be differences, don't worry. Then we will have some consensus arrived at.
It should be 2-way traffic, not 1-way traffic, because we are also learners.
Yeah. More.
Sir, before this one, we discussed about section 12 requirements and all. I think company secretary compliance starts from the section 12 only. Because few companies might have changed the address, but their master data shows some other address and this address as per the balance sheet shows some other address. So you can take a note of this one, and if required, you can pass on board resolution for change of necessary registered office, whether it is within city or outside the city, as the case may be. Special resolution, board meeting, general meeting, MGT 14 filing, along with INC 22 filing, all these things you can take care of by seeing the balance sheet from first line itself. There are two liability side, asset side. This is the balance sheet, basic balance sheet format. There are two classifications: current asset, non-current asset, current liability, non-current liability. There are two classifications. Then another one, operating cycle. What do you mean by operating cycle? Sir, you can throw some light on this current, non-current operating cycle.
Current assets are such assets which are capable of being converted into cash within the time of operating cycle of a particular company, if that is not defined within a period of next 12 months from the date of the financial statement. There, in case of current assets, we have this inventory, receivables, then the advances, etc. coming in. One has to look at within what length of time they can be converted into cash. That decides whether it is current or non-current. In case of liabilities also, same, it is applicable. Now, not necessary that all the companies' business operating cycle will be within 12 months. It depends upon the nature of business. If it is more than 12 months period, then that period will decide whether it is current or non-current classification. Yeah?
Operating cycle, sir.
That's what operating cycle. Operating cycle definition, very good. Operating cycle, from the point of time of acquiring, purchasing the raw material till the whole process is completed and sale invoice made, money is received. That completes one cycle, operating cycle.
Yes, sir. This is the diagram, sir. From raw material to work in progress, finished goods, accounts receivable and cash.
Yeah.
This is nothing but operating cycle.
You see, without looking at the slide, I have explained it. Oh, figures are not visible, huh?
Oh, okay. Equity and liability, there are 4 parts are there. Shareholders funds, under liability side there are 4 parts. Shareholders funds, next line item is share application unit pending allotment. Third one is non-current liability. Fourth one is current liability. This is the liability side of the balance sheet. So I repeat, first one is shareholders funds. Second one is share application money pending allotment. Third one is non-current liability. Last one is current liability. This is the structure of the liability side of the balance sheet. Under shareholders funds, first one is share capital. Share capital, if you pick up the share capital, you should, as a company secretary, you should see the compliances angle, what and all compliances you need to take care while verifying the share capital schedule. From balance sheet, you should see what and all compliances whether company secretary has to take care while certifying, in case of practicing company secretary while certifying MGT7 or MGT8 or MR3, or in case of whole-time company secretary in case while signing the balance sheet. We have to discuss in that angle, not with respect to chartered accountant related disclosures.
Decoding the CSV.
Yes, right.
Yeah.
Yes, sir. So share capital, first under shareholders funds, there is a first item is share capital. Share capital, we already know we have, there is a 5 classifications of share capital: authorized share capital, issued capital, called up capital, subscribed capital, then last one is paid up capital. So first one, if you pick up first types of authorized share capital, first one is authorized share capital. What and all company secretary has to take care while dealing with authorized share capital. The moment authorized share capital, if you see, you have to go through this first section is section 60. The next section is section 61. Next section is section 64. Section 60, it is a old, under old also it was there, now also it is there. Wherever companies are mentioning authorized share capital in their correspondence or documents or any letterheads or bills or something, it is mandatory to mention subscribed as well as paid up capital. If you want to mention authorized share capital, you have to mention along with it subscribed and paid up capital mandatorily. So whenever you are seeing any secretarial audit or something, so whenever any company is disclosing this authorized share capital amount, so you should see that in the same prominence place, in the same manner, whether subscribed and paid up capital is also disclosed or not. So you can verify as a company secretary with respect to section 60. Then authorized share capital section 61, there are some 4 or 5 classifications are there. Increase of capital, subdivision of capital, consolidation of share capital, or cancellation of share capital, or redemption of share capital. There are 4 or 5 are there. Then related compliances you should see as with respect to authorized share capital. Then when it comes to this section 64, you have to file in form number SH7. SH7, you have to file before ROC within 30 days as per section 64. Whatever 5 elements are there under 61, whatever parameters specified under 61, you have to file SH7 under 61. 64, 61, it is, you should read 61, 64 along with SH7 together read with. Then in case of if a number is specified, authorized share capital 5 crore divided into 50 lakhs into 110 rupees each, 100 rupees each. If a number is specified in the memorandum of association and articles of association, then there is a requirement of passing special resolution. If there is no number specified in the articles of association, then there is no need to pass a special resolution. Ordinary resolution is sufficient. So if a number is specified, then you have to pass MGT special resolution, you have to file along with HH7, you have to file MGT 14 also within 30 days, both together. Then along with this, another one compliances, section 15 compliances. Section 15 says each and every alteration of MO and AOA should contain footnote. Otherwise, nowadays we are getting all resubmissions saying that section 15 not complied. We mention footnote in each and every copy of the MO and AOA.
On every page of
Yes.
the memorandum and
Yes,
articles.
sir. Whether it is every page or last page.
Wherever amendment has taken place, on those respective pages, footnote has to be mentioned.
Whether it is a footnote with respect to that meeting or all the alterations made.
All from
Because
incorporation.
it says every alteration. Section 15 says every alterations. You can mention, I think 1, 2, 3 or symbol, some symbols, rupee symbol or some symbol you can use, single one, something, triple one, 4, 1, something like that. Section 15 compliances you should take care while dealing with this authorized share capital. There is a definition for authorized share capital, nominal capital also. And there is an impact. The increase of authorized share capital, there is an impact under so many documents. First one is there is an impact in the alteration of MGT 8. MGT 8 we are certifying last class, I think alteration of, is there any alteration in MO and AOA during the financial year? So by many companies, I think now under new companies at 2013, I think people are following, all companies are following increase of share capital. Otherwise, sometimes under old law, we have seen many balance sheet, the auditor might have increased the authorized share capital, auditor might have allotted the share capital on 31st May, but while filing the balance sheet, we will come to know that the company has increased the authorized share capital, company has allotted the share capital. So we have to, it will have an implication on MGT8 where we have to, company secretary has to specify or certify saying that alteration of MO and AOA is in line with the Companies Act 2013, and there is an implication on MGT7. MGT7 you have to specify new authorized share capital in MGT7 form, and in board report also we are mentioning, some few companies are mentioning authorized share capital as well as in addition to paid up capital, subscribed capital, called up capital. All these things you have to take care, and along with this whether board meeting is there, EGM is there, as per SS1 board meeting, as per SS2 EGM is there, along with this explanatory statement is there or not, whether it is circulated to all the members within 7 days, 21 days, whatever there, you have to see all this authorized share capital with respect to authorized share capital. Sir, if anything is there, you can.
Yeah, fine.
Yes, sir. So this is with respect to changes in authorized share capital compared to last year and current year. Now next comes to, there are 5 classification, authorized share capital is over. Next one is issued capital, subscribed capital, called up capital and paid up capital. There is a separate definition is there under definition section 2 of the section subsection 50, 86, 64. There are different definitions are there. So you can go through those definitions at your end. Next capital is issued capital. How different sections are applicable, our company secretary has to take care while seeing the issued capital in the balance sheet. There are, these are all the sections we need to verify while seeing the issued capital in the balance sheet. First one is section 23. Section 23 talks about part 1, part 2. Part 1 is applicable for public issue. Part 2 is applicable for other than public offer. Under part 1, part 2, there are the issue of shares under private placement, issue of shares under preferential allotment. Then another one is, last one is right issue. Whether these compliances are complied, if there is any change in the issued capital as far as balance sheet is concerned. Then 42 talks about private placement, 62(1)(a) talks about right issue, 62(1)(b) talks about ESOP. In case of public company, section 179 talks about issue of shares. In case of issue of shares, MGT 14 needs to be filed before ROC within 30 days. In case of preferential allotment, we have to pass special resolution. So board meeting should be there, EGM should be there, MGT 14 should be there, special resolution should be passed. We have to file before ROC. And in case sweat equity shares bonus issue, there will be some specified provisions needs to be complied if there is a issued capital by way of sweat equity shares or bonus issue. These are all things are relating to increase in issued capital or changes in the issued capital related compliances as far as company secretary is concerned.
Shares issued for consideration other than cash.
Cash. Next slide it will come, sir. These are all the compliances you have to take care while dealing with balance sheet. Yes, madam.
Till 31st March, the investors have subscribed, let's say 50 shares, and rest of the issue, the investors did not subscribe till 31st March. So when we are preparing the balance sheet, or for that matter filing form PAS 3, in the issued capital, total 100 shares should reflect, or only the subscribed one, I mean the 50 shares? But won't that give let's say those 50 shares do not get subscribed at all. I mean, the rest of the 50. Then
you will get answer in the next slide, madam.
Okay, understood, sir.
Because issued capital, subscribed capital.
Okay.
Whatever resolution you passed for at the EGM, you have issued the shares. So that is the issue capital. And whatever shareholders have subscribed, that is the subscribed capital.
Go to next slide, then we will see.
Subscribed capital, sir.
Yeah. Your question, private placement. Before you mentioned PS3, PS4. Board resolution. Then EGM, then board for allotment again. Okay. Issued capital is what you have issued as approved by
the shareholders eventually.
EGM.
Yes.
Okay. But at that point of time itself, you know to whom all you are making the offer.
Yes.
You have their details, complete details. KYC, if I can call it that way.
Okay.
You have all the details.
Yes.
So issued capital, you know what it is. In spite of they having agreed to subscribe when you had the list with you, some of them failed to subscribe. That is the situation you are talking about.
Yes.
For that, you need not wait up to 31st March. Their time is prescribed.
Yes, the offer.
In your offer document itself, you say 14 days, 30 days, whatever time. One need not wait till 31st March. That time over. Within that time, if all the identified investors did not subscribe, so subscribed capital is freezed. Out of 100, say 80 subscribed, 20 is unsubscribed. Now, issued is 100, subscribed is 80, paid up is 80. Am I right?
Okay, sir. Understood. Thank you.
That's why I told next slide, sir.
Anyway, whatever I have explained is not in the slide, huh? Next slide, he said he is creating the...
Sir, it is linked to this, sir. Sir, we are all learning linking of these provisions of various provisions.
It is creating the space for our discussion.
Changes in subscribed capital can be done by a right issue or preferential issue or ESOP. Right issue, acceptance, declination, renunciation, all these things can be done by a changes in issued subscribed capital. There is another question is there, whether without receipt of money can you issue share certificate in the case of incorporation of the company. Other than incorporation, there is no doubt at all. But in case of incorporation, whether can we issue share certificate without receipt of the money? In case of Indian company, yes. In case of foreign company. Yes, no. Indian company, yes. MNC company. MNC also, yes.
Your private conversation will not fall on my ears. You have to take the mic and speak.
Nagaraj, you can hand over mic, whoever wants to speak. Yes, we can.
Yes.
But there will be some FDI restrictions will be there. Foreign direct investment, FIRC, FCGPR filings.
That's all right. But your question is correct. They all fall under Companies Act 2013 only.
As per my way, we have to issue shares within 60 days, whether it is received or not, including MNC companies. Yes. Now, another sub question with regard to this one only. I have incorporated one company in the month of March 1st. It is a MNC company. I have not received this subscribed capital, whatever subscription to the MOA, I have not received as on 31st March. I have to close the balance sheet as on 31st March. Subscribed capital is 1 lakh. In the balance sheet, whether you should show 1 lakh or whether you should show 0 because I have not received any money. But what about other side? Asset side of the balance sheet.
Subscribed capital is 1 lakh only. You ask about paid up capital.
Paid up capital is also 1 lakh.
For 1 month.
It is our wish.
No.
Correct. I have to file before income tax. I don't want to prepare 2 balance sheets. I don't want to comparison next year.
December 1st, then this question.
Okay,
yes,
done. December, okay. For your satisfaction, happiness, okay, December. So, in case of subscription to the MOA, if a subscription money is not received by the company as on 31st March, Section 10 subsection 2 says it can be disclosed as a receivable from the subscribers to the memorandum, and you can show continue in liability side as a paid up capital, even though it is actually not paid, because if you go to this debt receivable from the subscribers. So it is deemed to be paid up capital. Changes in called up capital. Authorized share capital is over, issued capital is over, subscribed capital is over. This is called up capital related, company secretary related compliances. Called up capital, section 49 says it should be, call should be uniformly called. You cannot call 10 rupee shares, there are 10 shareholders are there, you cannot call Mr. A alone for you, you have to pay entire amount. B, you can pay as and when you want. C, you can pay whenever you don't pay at all, something like that you cannot do. Section 49 says you have to, company should call uniform, the company should maintain uniformity in calls in arrears. Then, in case of partly paid up shares, this is nothing but partly paid up shares. Partly paid up shares do not have a voting rights. Section 106 talks about this on voting right related provisions. If the read with this section 10 subsection 2, in case of subscribers to the memorandum, if they are not paid the money, they do not get voting rights under 106. The issue arises, how do we hold the AGM and approve the balance sheet? I hope you are understanding my question. I am going back to the whatever sir has informed. In case of subscription to the memorandum, paid up capital, we are disclosing it as a paid up capital, and on the liability side, asset side, we are disclosing it as a debt receivable from the subscribers. So that is, as far as paid up capital, debt receivable, balance sheet is tallied. But as far as company secretary is concerned, we have to hold a AGM. On the date of AGM, but section 106 says if you do not pay any money, then voting rights will be, there will be restriction on voting right. If there is a restriction on voting right, how do you pass the resolution for adoption of accounts, auditor appointment, and how do you conclude the AGM without compliance of this 106?
Partly paid shares, partly paid up shares, they are not having voting rights. That is the point. Partly paid up shares. Now, you see, the partly paid up word, consciously he has avoided in his sentence. Huh? Yeah. The subscriber to the memorandum are treated as fully paid up shares. So they can vote.
Sir, 106 says any money paid on shares or any other sum payable. Sajivan sir, I think you may agree my point, sir. Any other, 106 says any other amount, sum of money payable on shares. But we are passing the resolution, we are filing before ROC, and IMCI is also taking on record. But practically, how to certify this MGT8, MR3 and other things?
No, I have to answer to you or what?
I am leaving it to the audience only, sir. I am leaving it to all the members, sir.
See, any money due, all this is applicable to subscribers other than subscriber to the memorandum of association. That is the stand. Thank you, Mr. Kedarnath. Yeah.
Okay. Dwarkanath sir.
He has agreed with me.
Yes, sir. Next one. In case of partly paid up shares, company cannot approve any share transfer. So in case of any share transfer in the balance sheet, you should see whether it is a partly paid up shares or fully paid up shares. In case of partly paid up shares, you cannot approve no company can approve the shares in case of partly paid up. If they are approving it, then give a notice to the transferee. Then inform him, then take a consent of him and approve it. Then in case of share transfer, calls in arrears, there is a 10% interest rate. It is a interest rate. Then in case of calls in advance, it is a 12% interest rate. Then in case of called up capital, there is an implication in the board report, in the implication in the register of members also, and there is an implication in the MGT 7. There is a separate column called what is author share capital issued, subscribed, called up, paid up, everything. There is a disclosures are there. There is an implication in the MGT 7 form also. This is all about changes in the called up capital. Sir, if anything is there, you can add it, sir. Or we will move to next slide.
There is something important now. We have to break for tea.
So this is the important. Yes, sir. We will break for tea for how many minutes, sir?
Vishwas?
15-20 minutes we will break for tea. Okay. Where it is?
Tea and snacks is arranged in the basement. Kindly have and come back by 15 minutes.
20 minutes.
Yeah, the people who are sitting in the first floor and second floor, if you have any question, kindly write it in a piece of paper and hand it over to us so that we can convey the same. And you can come here, yeah. So the speakers are also giving an option. You can come all the way here and then you can present your question to the speakers. Yeah, some of the seats are vacant in the auditorium in the ground floor. Kindly come over from first floor and second floor and you can occupy the seats here. ದಯವಿಟ್ಟು ಖರ್ಚಿಪ್ ಯಾರು ಹಾಕಿ ಹೋಗಿದ್ದೀರೋ ಅವರು ಕೂಡ ಬಂದು ಕೂತ್ಕೋಬೇಕು.
Shall we restart or can we wait for some more time?
We will start.
We'll start, sir.
Yeah.
Yes. Because
welcome you back for our session on analysis of financial statements, decoding the CS way. Over to Mr. Vijay Kumar Sachin.
Yes, sir. Sir, so far from 3 o'clock to 6 o'clock, I think still we are at 40 or 50 slides. We will speed up little bit, sir.
No. Huh? No, dinner cannot be skipped.
Sir, slides can be slipped.
Do not worry about all those things.
Because we are still under share capital, another 30-40 slides may be there under share capital itself.
Let us continue.
Yes. Changes in called up capital, we already discussed in detail. Changes in paid up capital. These are all the areas where we can see compliances with respect to changes in paid up capital. Paid up capital can be changed in 4 or 5 ways. One is increase, another one is decrease. So another slide we will discuss what are all the ways of increasing the capital, what are all the ways of decreasing the capital, we will see in another slide. Here for just for limited discussion, there is an implication on certain items. So first thing we have to see whether board meeting, what is the type of allotment, whether it is a right issue or product placement or a preferential allotment. Based on the type of issue, whether you should see special resolution or board resolution is sufficient or special resolution is required. Depending upon that one, whether valuation is required, registered valuer section 247. If valuation is mandatory, then you have to pass board resolution or audit committee resolution as the case may be for appointment of registered valuer first. because we are getting a registered valuation report from the registered valuer, but I don't think whether we are passing resolution for appointment of registered valuer as required under 247. If an audit committee is there, then audit committee has to mandatorily appoint auditor registered valuer for getting a valuation report from the registered valuer, or in case of no audit committee, then board has to appoint a registered valuer. That compliances you have to see depending upon the types of valuation, whether it is a preferential allotment or private placement. Thereafter, you have to see whether right issue, valuation is not mandatory. Other than right issue, valuation is mandatory. Then separate bank account. We have to open a separate bank account in case of 42 and 62, whereas in case of 62, 1 year right issue, separate bank account need not be maintained. We can deposit to the general bank account only. Then issue of shares versus allotment of shares. What is the issue versus allotment? When we have to file MGT 14, whether MGT 14 can be filed only in case of issue of shares or allotment of shares. 179 word says issue of shares, not allotment of shares. Then another issue comes whether issue of shares can be passed by way of a circular resolution or allotment can be done by way of a circular resolution. Then once pass 3 is filed, whether master data will update or will not update. Sometimes V3 website, sometimes it may get updated immediately, sometimes it may not get updated immediately. Then after allotment, you have to issue the share certificate. For share certificate, you have to issue a share certificate in case of other than demat. Demat shares, you have to file a corporate action form before the NSDL or CDSL, as the case may be. Then you have to update relevant register in case of director shareholding or the register of share application money, as the case may be. Then it will have an implication on MGT 7 also. MGT 7, we have to mention paid up capital number issued during the year, issued to the individual or body corporate or other than body corporate, or there are some 4 or 5 slides issued to the foreign MNC company, body corporate, FII, something is there. It will link to the past 3 is linked to the MGT 7. Then board report, we have to mention whether issue of shares is there by way of a preferential allotment or right issue or private placement or ESOP or bonus issue, something like that. You have to specify separately with proper disclosure as required under respect to provisions of the Companies Act 2013. Then it will have an implication in case of MGT 8. MGT 8, whether issue of shares has been complied in line with Companies Act 2013. CARO report, there is a auditor has to certify CARO whether 40 to 62 compliances has been done or not by the auditor, has to certify in his CARO report in one of the point. Then board report, allotment date, issue date, master data, it is over. Then once paid up capital is increased or decreased, there is a threshold limit applicability is there. That is the threshold limit applicability. There are separate slides are there at the end. There are MGT 8 applicability, XBRL applicability, or KMP appointment applicability, or CSR applicability may be there, or vigil mechanism applicability, or rotation of auditor applicability. There are many threshold limits applicability we should see once the paid up capital undergo a changes, whether it is the increasing trend or decreasing trend, we should see whether company has passed a circular resolution for allotment of shares or whether it passed a board meeting resolution only, because in 179 read with circular resolution 175 says circular resolution cannot be passed for issue of shares, but what about allotment of shares? Those things you have to see. Then section 67 buyback restrictions. The company cannot give a loan or guarantee to the employees or shareholders or directors to buy the shares of the company. So share application money deposited by the directors or the shareholders or employees, the company cannot give a guarantee or loan to the directors to buy the shares of same company. There are some section 67 restrictions are there under companies that those things you have to see while certifying the balance, while signing the balance sheet in case of whole-time company secretary, in case of practicing company secretary while issuing MGT 8 or MGT 7 or MR3 as the case may be. This is with regard to paid up capital. Then next, sir, if anything is there, you can add it, sir, please.
In addition to whatever compliances under Companies Act Mr. Vijay Kumar Sajjan has mentioned, there is one important aspect which is generally overlooked by company secretaries is utilization of issue proceeds. The purpose for which issue was made. PS4 will mention about that. object of the issue in case of private placement or preferential allotments. In case of IPO, etc., prospectus itself will talk about object of the issue, etc. Now that allotment is over, that fund can be utilized by the company. After allotment, company can utilize the funds. Till then, no. Separate bank account, it will be there till allotment is completed, that PS3 is filed. Chalan is generated. Only after that chalan is generated, you can access the funds legally. Then whether utilization is as per the objects mentioned, that is important aspect. That also will have to be reported as part of disclosure in the financial statements at the end of the year in which such issues have taken place.
Adding to this one, sir, only preferential allotment or private placement only we cannot draw unless class 3 is filed before ROC, but whereas in case of right issue, we can use it the moment we receive the money. This is a light differentiation between right issue and private placement and preferential allotment. The next disclosure in the balance sheet is par value per share. We are seeing the par value 10 rupee for each share, something 10,000 equity shares of rupees, 10 rupees each. This year. Next year, in brackets, they may change something else, 1,000 shares of rupees, 100 each. If they change comparison, then you have to comply necessary approvals in case of consolidation of shares. Rupee undergo increasing trend, share number of shares decreasing trend. So my team has did some exercise. My team is sitting here. They have done, I think, extensive work for almost 15 days from morning to evening. Maybe yesterday night, 11 o'clock. So in case of consolidation of shares, NCLT approval, in case of subdivision of shares, shareholders approval, as the case may be, you should see in case of par value per share. Section 61 compliances. Next one is reconciliation of number of shares outstanding at the beginning and at the reporting period. We already told what is the ways of increasing the number of shares, what is the ways of decreasing the number of shares. These are all the increasing trend, decreasing trend. My team has mentioned some arrow mark, employee stock option scheme, right issue, private placement, bonus issue, preferential issue, convertible security, subdivision. In these cases, number of shares will increase. Then decreasing trend is buyback of shares, share forfeiture, capital reduction, redemption of shares, consolidation of shares. In all these cases, you have to show respective provisions, whether it is complied or not, respective filings and respective disclosures at board report, MGT 7 or MGT 8 or MR 3. Or register relevant registers, or reporting it to the relevant appropriate authorities, as the case may be. This is with respect to reconciliation of number of shares. Sir, if anything is there, you can add it, sir.
Yeah, the forfeited shares. How do we disclose in the balance sheet? Forfeited shares.
And there is another question also with respect to forfeiture during tea break, sir. In case of incorporation, subscribers to the memorandum, one subscriber is not at all ready to pay the money after incorporation. How do we commence the business? How do we file the frontier? And how do we do this forfeiture of shares in case of something? There is one question from the member, sir.
That member is present now? The person who asked this question during the tea break, if he is not here, we will not answer that question.
Thank you, sir.
Good.
Yes. Then there is another disclosure under share capital rights, preference, restrictions attaching to the each class of shares, including restrictions on the distribution of dividend, repayment of capital. All these restrictions you can see from the articles of association. There are some MNC companies or few companies, they will have their own SHA, SSP, shareholders agreement or share subscription agreement. Those shareholders agreement, they are making part of the articles of association. First article they are mentioning as a part 1, section 1, part 2. All these restrictions, you have to see these restrictions, whether it is disclosed properly or not in the shareholders agreement as per the. And in case of preference shareholders, we are attaching terms of preference shareholders. What is the term, whether it is a redeemable, non-redeemable, cumulative, non-cumulative, what is the conversion ratio, what is the percentage, what is the fair market, all these ratios we are mentioning in the terms of preferential issues. Then in case of equity shares, there are two kinds of equity shares, voting rate, differential voting rate, all those disclosures, it will come in the balance sheet as part of the rights attached to the equity shareholders, rights attached to the preference shareholders. There are various kinds of preference types of preference shareholders. All these rights auditor normally mention in the share capital schedule of the balance sheet. Those rights, whether it is a properly disclosed in line with our past 3 or SH7 or term sheet or AOA, MOA, you can see in the during the secretarial audit. The next one is shares in respect of each class a company held by its holding company, ultimate holding company, including shares held by subsidiary company, associate subsidiary company of the holding company, or ultimate holding company. In aggregate, there are some holding company, subsidiary, ultimate holding company. All those things are there. We are auditor is showing whether who is our shareholder, if it is an individual shareholder or non-individual shareholder, what are all the compliances are recorded. So we have to see these are all the definitions with respect to holding company, subsidiary company, associate company. Section 246, 287, 26 talks about holding subsidiary, and what are all the compliances you should see as a company secretaries with respect to these related disclosure. Schedule 3, class number F disclosure with respect to holding company, subsidiary company, ultimate holding company. These are all the disclosures you have to comply while seeing this ultimate related party holding subsidiary. This one, first thing we have to see is whether 89 section is complied or not. Beneficial declaration, MGT4, MGT5, MGT6 declarations, then section 90 declaration, BEN 2 declarations, whether it is declared or not. And MGT section 89, there is a register is there. Section 90 also there is a register, whether those registers are maintained or not. Then the relevant accounting standards are there. Because under Companies Act 2013, some few entities may not be the associate company, but as far as accounting standard is concerned, they are the associate companies. Whether we should go by accounting standard or go by Companies Act, because as per Companies Act, it is not an associate company, but as per accounting standard, it is associate company. Whether consolidation is required or not. Associate enterprises under accounting standard. Under Companies Act, it is associate company under section 2, subsection 6. Associate is defined under accounting standard number 23. Then there is an implication under MGT7. MGT7 in first page, second column or third column, you have to mention what is my associate company, as a subsidiary company, ultimate holding company. All these disclosures you have to mention along with percentage. Then you have to update in the relevant register. Then in case of non-individual shareholder, section 112, 113 compliances, it is missing in this slide. 112, 113 compliances. 112, in case of body corporate, it has to represented by some authorized signatory. 112, 113. In case of government companies, Governor of Karnataka or President of India has to authorize someone to attend the EGM. Those 112, 113 compliances needs to be missing here, but I am telling voluntarily. Then in case of subsidiary company or holding company, we have to see whether AS to 18, 21, 23, 27 relevant accounting standards are complied or not. As a company secretary, in case of company secretary accounts related position, we have to see all these things. Then AS 18 compliances, there are in AS 18, there are some related party transactions are there. We have to disclose in the notes accounts what are all the related party transactions between these companies, and we have to add 184 also MBP on disclosures, directors or common directors, 184 whether MBP on direct disclosures are properly received or not, whether any transactions between 188, 180 within this related party companies, we can go through this schedule and you can understand these many compliances are there or not in the company. Then another one discussion point. Once holding subsidiary relationship is established, whether subsidiary company can hold shares in its holding company as per section 19 of the Companies Act 2013. I think I should not have disclosed the section number. Now I have disclosed the section number. Once a relationship established, we cannot hold. Till then it can hold. Old existing holdings continue to, we can hold, we cannot change it. So there are some exceptions, are there trustee, beneficial interest, there are some exceptions under section 19. Yes, madam. Cross holding is there. It is possible, madam. Possible. There are few companies are there. Sir, if anything to add, you can, or we will move on, sir. Shareholder holding more than 5%, there is a column is there, shares specified number of shares held. So more than 5%, it will undergo a change based on the allotment or convertible securities. In case of convertible securities, ESOP, buyback, all these cases, so more than 5%, or in case of share transfer, transmission of shares, all these cases, there will be undergoing change in the 5% threshold limit of the shares held by each shareholder. Then shares reserved for issue of under options contracts, sir, your separately for equity as stated by the guidance note issued by the Institute of Chartered Accountants of India. Sir, I think you have stated that consideration other than cash, it is like, I told that it is covered in next slide, sir, it is covered in this slide, sir.
Yeah, issue of shares for consideration other than cash. One is the bonus issue, there is no consideration in the form of cash. But a disclosure of that issue will have to be there in the financial statement. Then other situations where shares are issued against some contracts, some agreements, commitments, etc., where again cash is not involved, that also will have to be disclosed in the financial statement. Yeah.
With respect to this non-cash consideration allotment, you have to take care in case of related party, you have to take care section 192 compliances. In case of shares allotted consideration other than cash, you have to, there is a 192 section, you have to get a valuation certificate, and 192 compliances you have to take care by, and read with 247 valuation report you have to apply. Then you have to see the agreement, because while filing the pass 3 form, it will ask mandatorily some agreement to be attached in case of consideration other than cash. Then valuation of shares services, it is covered under 247 itself, 192, 247. Then for a period of 5 years, immediately preceding the date as it balance sheet date it prepared, aggregate number, class of shares allotted as fully paid up pursuant to contract without payment received in cash, sir. It's covered in this one, sir. Bonus issue and other things, it is covered in this compliance, sir. Yeah. 247 audit committee board approval, section 62 1C preferential allotment, whether we should, in case of non-cash consideration allotment, whether it can be considered as a right issue or preferential allotment. There is a debate among the professionals whether I will consider as a right issue or preferential allotment. 62 1C will apply or not. Section 192, whether 192 should take a general meeting approval, and along with 247 valuation report you have to obtain. Then it is considered 192. Once 192 is applicable, then 188 related party transactions you have to take a board approval or general meeting approval, as the case may be, depending upon the threshold limit of the threshold limit. Then once shares is allotted, we have to intimate to the income tax department. There is some safety form is there, statement of financial transactions. Once a company allots shares more than 20 lakhs or something, there is a transactions limit is there. We have to intimate compulsorily before the income tax department. Then in case of FEMA compliance, with regard to FEMA, there are some FCGPR, whatever compliances are there, FCGPR every year, FLA return, whatever return is there, we have to file before respect to AD Bank with respect to
the question remains.
Yes, sir.
Whether it is rights issue or preferential allotment. Issue of shares against some contracts, some agreements.
We'll leave it to the audience, sir.
Is it rights issue or it is preferential?
So all easy questions I will answer. All complicated interpretation issues we will leave it to the audience, sir.
Okay, my interest is only answer. Whoever answers, I am fine with it. Bottom line is the answer.
1 minute, sir. Complete.
Agreed, sir. All are agreeing with your view.
Conclusion, sir. Conclusion, sir.
Conclusion is, it is preferential allotment, it is not rights issue.
Okay. Adding to this one, sir. conversion of a loan into capital, whether it is a cash consideration or other than cash consideration allotment.
It is cash consideration, but at the time of acceptance of loan itself, there should be agreement that it will be converted at a future date. Otherwise, later on, that loan we are not able to repay it, now we will convert that. That option is not there.
But what about the 62.3 compliances, sir? 62.3 says nothing in section is applicable in case of conversion of a loan to share capital if a special resolution is passed at the time of accepting the loan itself. Then there is one question. Another question, if you go back to this form PAS3, there is a column called consideration other than cash. Conversion of a loan into equity, ministry has classified it as a consideration other than cash.
While filling the form, if there are only two options and one it is not accepting, we all know how to successfully upload the form.
Sir, adding to this one, there is a Ministry of Corporate Affairs circular under old law saying that if a money is actually received as unsecured loan, then you can consider it as a cash consideration. Under old law, they have issued a circular. That is one thing. And second thing, Kerala High Court has issued one judgment saying that Fargo's case, it says that if money is actually received, then you can allot as a cash consideration only instead of other than cash. There is a diversion views also there.
I understand. Now you see, there are few instances where these e-forms need to be updated.
Aggregate number and class of shares allotted as a fully paid up buyer for bonus shares. Bonus shares, what are all the compliances you have to see as required under 63 or so. MGT 14 you have to file 63 compliances, PAS 3 you have to file, then SH1 in case of physical share certificate, then DMAT in case of DMAT shares. MGT 7 there is an implication, MGT 8 there is an implication, MR3 there is an implication, board report you have to disclose separately whether a bonus issue has been done or not, then relevant registers you have to update. Then MBP 184 director, in case of director allotment, he has to disclose change in director interest under 184 MBP 1. Then you have to intimate to the income tax department in ITR. It is other sources, statement of financial transactions. If it is more than 20 lakhs or something, company has to intimate to the income tax department. All these compliances with respect to bonus shares, bonus share disclosures and related compliances as far as company secretary is concerned.
Company secretary is reporting to income tax department. He made a statement there.
Sir, in case of company secretary, he is taking care of financial matters also. Then in that situation,
I am not disputing your statement. I am asking, should company secretary take that responsibility? Company secretary is always comfortable reporting to board of directors. It starts from there, it ends there. Reporting to board of directors.
The next disclosure under share capital schedule, terms of any securities convertible into equity preference issued along with earliest date of conversion, descending order starting from farthest to such date. You have to see this SH7 compliances, convertible preference shares, debenture conversion provisions, agreement, valuation, then AS20, there is a AS20 earning per share, there is a diluted EPS, whether he has calculated weighted average number of shares, all these things you have to see while disclosing these terms of securities, convertible debentures or convertible securities. Then aggregate number and class of shares bought back. In case of buyback securities, you have to comply all these provisions, 68, SH8, SH9, 10, 11, MGT 14, all these things. You can go ahead, sir, now, please. But adding to your point, sir, in case of redemption of preference share within a year, but CA Institute guidance note says that it should be continue to be disclosed under share capital only. Something is there under guidance note issued by the ICSI. Yes, sir. This is with respect to buyback. These are all the provisions you have to comply. SH8, SH9, SH10, SH11, MGT14 for special resolution you have to see. Then buyback provisions, 68 related compliances you have to take care while this one. Then it will have an implication on board report, MGT7, register of members. You have to destroy the share certificate in case of physical share certificates are there. Then MR3 you have to comply relevant, disclose properly. Then directors 184 MBP on disclosure. There will be there is a change in percentage of shareholding by the directors. Calls unpaid, showing aggregate value of calls unpaid by the directors and officers. What do you mean by director? Who is officer? All these things we already discussed. And section 49 uniform basis we already discussed. Then dividend it should not be paid on entire amount. It should be paid in proportion to the whatever amount paid. Section 51 compliances. Then section 106 already we discussed whether shareholder will have a voting right or is there any restrictions on voting right. 106. Yes, madam. Please go ahead.
Convert a loan directly under that section, but deposits into equity directly.
Water. Water.
Sale of Goods Act.
Security deposit, sir is asking, it is relating to Sale of Goods Act.
Yeah. Yeah. Same logic that we were discussing few minutes back. At the time of acceptance of the loan, we said there should be express clause agreed between that at a future date it will be converted into equity. Here also, if that clause is incorporated in the agreement, it can be done. Yeah. But it cannot be subsequent development that they want to change it, no. So we can consider it as a loan? Yeah. Yeah.
All JV entry, sir.
Huh?
All JV entry they want to do. Sir, you are asking something. Certificate in relation to, sir? Increase of capital or decrease of capital? That is also one of the reason of increase of share capital, sir, certificate shares. Then forfeited shares amount originally paid up, I think we will come back to this madam position, sir. It is already skipped because the concerned member is not there.
Anyway, we have a slide we will discuss.
So forfeiture, there is no section under Companies Act. There is a table F. Whichever company has adopted the table F is applicable for forfeiture of the shares. Then MGT1, there will be some changes in the MGT1 register of members in case of other than DMAT. In case of DMAT, car protection form, there is some implication in this one, and later on it will have implication on MGT7 board report. MGT7 list of shareholders. There is an implication. So please go ahead. Sir.
1 minute there.
Security deposit.
You can throw the question here, not among yourself. That's all right. again, my point is, he is giving his views all okay. Let him say loudly so that we also hear his views.
We will also learn.
Yeah.
Sir, this is all about forfeiture, sir. We'll
Yeah.
come back to that same doubt.
There is no doubt. There is no doubt. Mr. Funny.
Where the forfeiture shares were handled, but it needs to be taken care in the balance sheet. When we are reporting, we need to look at whether for what reason it is forfeited. They will make a note in the board noting.
Yeah.
Paid, it will be added as forfeited shares. Whatever money has been paid by him till the date of forfeiture, it will be added to the share capital as forfeited amount. Okay. If it is reissued, if there is a profit, it will go to capital reserve.
Good. Clear?
Thank you.
Thank you.
Thank you, Pani. But issue remains same, sir. What about in case of incorporation of a company? If one of the subscriber has not paid the subscription amount, how do we forfeit his shares, or how do we file the Form 20A for commencement of business as required under Section 10A? I think our Sajivan sir will have some answer, sir.
No. So before answering, some questions will have to be asked. How many subscribers are there? Only 2?
Sub-questions.
This is my question to you. Only
So
2?
assume either way scenarios.
If there are only 2 and one person is not subscribing,
One member, minimum less than minimum 2. Section 3 or 3A will apply.
yeah.
Falling below 6 months.
All that process
Unlimited
will
liability.
get in. All that process will get in.
But what about more than 2 shareholders, sir?
Now, let me talk as a promoter of the company, not as company secretary. Promoter will have to do the business. Maybe it was a group of people who came together and then subscribed to the memorandum and incorporated the company. One of the member is not honoring his commitment. One of these people can take over that responsibility and move on. Business has to continue.
But now Form 20A has been amended, sir. We have to enter the bank account of the remitter, respective remitter. No. I think it is a respective remitter. Okay, next one.
But you see, that is not Companies Act requirement. SEBI requirement, I have come across that 3 months back. There was some private placement made. Auditor has to certify with the details of the remitter's bank account, subscriber's bank account also. Then it took 3-4 days of struggle to get their bank account details from them. The auditor certified and it was furnished. It is not a Companies Act requirement, as you rightly said, but there are other regulators who insist for that, just to ensure that there is no circular transaction of money that has happened for the purpose of satisfying this private placement, etc. That is the objective there.
Past 5. Next one, company shall disclose shareholding of promoters. It's a requirement as per the amended schedule from 21-22 onwards. Who is a promoter? In our MGT7, we are showing some other promoters, classifying some few directors as promoters, but auditors are showing some other promoters. There should be sync between promoters as per balance sheet, promoters as per MGT7. Why it is promoter classification is important? Because it will have an implication on section 2 subsection 60. Section 2 subsection 60 and read with section 149 subsection 12. Read with section form number GNL 3. And there is a Ministry of Corporate Affairs circular when the ROC should not launch any notices or prosecution in case of non-promoters, because only officers in default are liable for violations of the provisions of the Companies Act. And while filling DR12, because many times we are giving it to our office colleagues or somebody who whatever he files a DR12, it is a final. We are a small form. Why we should say file it. But it will have an implication in case of violation, because promoter, executive, non-executive, it will have an impact in case of violations, officer in default. As per 149 subsection 12, non-promoter, independent directors are not liable for violations of the Companies Act unless there is any, with his consent, knowledge, negligence has happened, then only which is why he is liable, otherwise he is not liable. Or if a GNL 3 is filed before ROC for specifically appointing one person to look after this compliance of Provisions Companies Act, then he is alone liable. If you are classifying while filing DR12, if you are classifying as a promoter, then if he is not involved in day-to-day affairs, then while filing adjudication order, adjudication application or compounding application, ROC will see that whether what is the DR12, or while issuing a notice whether he will call for minutes, whether he is an independent director, non-promoter, promoter, DR12, MGT7, what is the disclosure, balance sheet, what is the disclosure, whether it is shown as a promoter, non-promoter, all this linking is important.
The clause B here,
Yes, sir.
a person who has control over the affairs of the company, directly or indirectly, whether a shareholder, director or otherwise. He is not a director, he is not a shareholder, he is some other person. How do you classify him as a promoter in your returns, etc.?
We will leave it to the audience, sir.
He is not a director, he is not a shareholder.
So that's why it is in bold letter, sir.
Yeah. But otherwise, he has control over the affairs of the company.
De facto, de jure.
I have faced one situation where the person was a director, but a professional director on the board of the company, not a shareholder. As Mr. Vijay Kumar Sajjan mentioned, he had influenced the auditor to include him under promoters group. Auditor had certified it. Then the promoter said, sir, this is wrong. How can the CFO can be promoter? He does not hold any shares also, and he does not have any stake in the company, being only professional there. Issue came up. The promoters could not handle the auditor. Then they approached me. I had to have a good session with that auditor, educating him about control over the affairs means what? Who is CFO? What control he has got on the affairs of the company? It is the promoters, say the managing director or another whole-time director who has the controlling stake in the company. So finally, auditor agreed with my point of view and he changed that promoter's classification. That is one part. Now this question Mr. Vivek Khede was trying to answer. Otherwise, how do you deal with the otherwise person who has control over the affairs of the company?
He is not trying, sir.
But that person must be very wise. Not a shareholder, not a director, but having control over the affairs of the company. Now, how can we call him otherwise? He is wise. And you call him otherwise.
Sir, somebody said it is only wife, not wise wife.
Sir, that is something wrong here. Maybe drafting error, huh? Okay, move on.
And it may have implication in SEBI also, sir. Something promoter shareholding, changes in promoter shareholding, something here. Satyana. Sir. He is trying actually, sir. LinkedIn, recently some order passed by the LinkedIn. Nagaraj, you can give a mic.
No, there may be some person who is controlling the affairs without being on the board. In the group companies, it happens. It's very common. In a group company where there are 10, 15 companies, the main promoter may not be a director. He will make some other people as director, but everything comes to him only for approvals.
Yeah.
So that person is generally
His
the person.
driver is also a director. His cook is also a director.
I think maybe concept of chairman emeritus, sir.
Okay, move on.
This is the liability of independent director, non-executive director, non-promoters. DR told this MCA circular clarifies ordinarily they are not liable, only these people are liable. That circular number is 1/2020, 260, 140. Regulation 25 also there is a similar wordings with respect to 149. Told same wordings are there. JNL 3 DR told we already discussed it. Then this is all about share capital. We are still under share capital first line item only. I think maybe we have spent almost 3 to 6:30, sir.
Don't worry. That is very important item in the balance sheet. Without capital, company cannot exist.
True, sir. Very true. We'll move on.
Yeah.
Next one, next line item under equity and liability, under that share capital. Under share capital is over. Next line item is reserves and surplus. So these are all the classic disclosures and reserves. And these are all the various reserves and surplus as per Schedule 3.
Various kind of reserves.
Various kinds of reserve, capital redemption reserve, security premium, debenture redemption reserve, revaluation reserve, share options, outstanding account, other reserves, and surplus.
Surplus, what is that surplus? Balance in profit and loss account.
Profit for the year or accumulated profit.
Accumulated profit.
We will go.
Sorry? Free reserves.
Free reserves.
Important, you said. Nobody disputing it. It is important. It is important. Next.
Yes, sir. So we are having few slides of each and every item. We will run through it quickly, sir.
Yeah.
Then what is the difference between reserve and fund? If there is a specific earmarked investments, then it is called as a fund. Otherwise, it is called as a reserve. First item is capital reserve. How capital reserve we can, a few examples are profit from sale of fixed shares, the reissue of forfeited shares, redemption of preference shares, merger, amalgamation, there will be some capital reserves are there. So these capital reserves, as far as company secretary is concerned, it is not considered for 198 for CSR calculation or manual remuneration calculation. It is not considered for net worth calculation under 2 subsection 57 net worth calculation, which is required for MGT7 filing, and it is not considered for dividend distribution also. Then capital redemption reserve in case of preference shares or preference shares section 16(9), or in case of bonus issue, buyback shares, redemption of preference shares. These are all the sections you have to say if there are any changes in variation in the increase or decreasing trend in the capital redemption reserve. These are all the sections you have to comply, and these are all the board meeting, MGT 14 filings, board meeting, special resolution, or general meeting or board meeting, as the case may be. You have to take care. By seeing the capital redemption reserve, you can go through all these provisions, various provisions, compliances with respect to company secretaries. Then security premium. Section uses the word security premium. Schedule 3 uses Schedule 3. I think Schedule 3 uses the word security premium. Section uses the word security premium account. Then earlier Schedule 3 pre-amended Schedule 3 says security premium reserve. That reserve word is deleted now. The section 52 only for as you are aware, only for 5 purposes we can use it for security premium, premium amount.
Yeah, you can utilize that. Yeah.
Please go ahead, sir.
Utilizing the securities premium account, that is for these many purposes.
Correct, sir.
Issuing of fully paid up bonus shares, writing of preliminary expenses, writing of expenses of issue of shares or debentures, premium on redemption of redeemable preference shares or debt, buyback of shares. Now, the third one, writing of the expenses of issue of shares or debentures or issue expenses. Let me put it that way. Issue expenses. Take a case of a company where IPO is made. Issue expenses are listed in the prospectus itself. 1 or 2 or 3 items will be there. Merchant bankers, register to the issue, then underwriter, market maker, etc., etc. They are all under issue expenses. They can be written off from this securities premium account. There will be expenses like payment to auditors, because for prospectus purposes, the financial statement audited is mandatory. It should be not more than 6 months old. Then there is a restatement of financial statements duly signed by the auditors, etc., etc. There also fees are paid. That fee is not appearing in the issue expenses disclosed in the prospectus. But it is issue expense because amount is spent only for that purpose, these certifications, etc. Does it classify for writing off as issue expense, or issue expense as it appears in the prospectus is the amount to be paid to the so-called intermediaries, merchant bankers, underwriters, market makers, RTA, then some advertisements, printing stationery, etc. Question is, these expenses which are not listed in the prospectus, do they also qualify to be written off from the premium account or not? That is the question. Somebody asked it. But the prospectus has not included that under issue expenses.
Here, the section does not say the expenses as specified in the prospectus. As long as it is connected with the IPO, it can be written off. That is my view.
Excellent. I agree with your view. Thank you.
Another questions with respect to this one, sir. There are some few questions here and there we are getting with respect to security premium account. Whether same amount, whatever security premium account, you should not use it for 5%. It means that whether it should be earmarked FD or some bank balance should be there always in the balance sheet, or can we use that money? What is the restrictions of security premium? Whether there is a restriction of debiting to that account, or whether there is a restriction of withdrawal that money and using it for business purposes.
Good. Any response to that?
No, sir. There is no need to keep that money equal to money in a deposit, etc. It can be used in other words. Securities premium account can be debited only for these purposes. In case of premium,
Amount can be used for any other purposes.
it cannot be used for any other purpose except these 5 purposes.
Yeah, correct. There is no need to keep the amount separately in a separate bank account equivalent to security premium account for utilization for this purpose, etc. No such requirement. For writing off the securities premium or debiting the expenses, it can be used. no need to keep the fund separately for that.
Yes, sir. Agreed, sir. Because there is one auditor opinion. Auditor has asked some clarification in writing for this question only, sir, from me. I said under 205, under old law 205, more than 30 days dividend and all, you should transfer to bank account. The word is bank account. Here word is account, not bank account. So based on these two wordings only, we gave opinion. He also agreed. He also signed the balance sheet. Because of that only, I asked this question before the audience. In security premium account, these are all the restrictions, account, reserve, all these things we already discussed.
Section, what it could be either equity shares,
Sir, security as defined under Security Contract Act. Sir, security as defined under Security Contract Act, which includes everything.
All shares,
all.
Equity shares, preference shares, debentures, all are securities.
right, the premiums,
there is a definition, sir.
the premiums arising out of these
Yes.
instruments
Yes.
can be called as securities premium.
Correct.
Yeah, thank you.
And this security premium account, security premium can be considered for the purpose of sections 186 calculation within the limit of 60%, 100%. Then you can calculate for 180 limit. Security premium account is considered for 180, more than over and above borrowing in excess of paid up capital free reserves and security premium. This can be considered for 180 compliances also. The net worth calculation, we should include net worth calculation for the purpose of 2 subsection 57 net worth calculation, which is used for MGT7 calculation. Then debenture redemption reserve, all this debenture redemption section 71 or so, we have to comply all debenture redemption reserve 10%. All these things we have to comply in case of debenture redemption reserves.
Yeah.
Then net worth calculation, this is the net worth calculation where we have to use paid up capital, paid up preference share capital, then security premium, free resource balance, then deductions, accumulated losses, deferred tax, miscellaneous expenses. This is the calculation for net worth. We are considering security premium as well as paid up preference, paid up equity also.
What is the question?
The employee stock option reserve. Employee stock option reserve, is it to be included in the net worth?
Employee stock option reserve.
Yeah. If you go to your first slide, that is there, I think, if you see. Yeah, before that.
First slide, our both photos are there.
No, first slide, before this. Before this, not that. Not that. First one you had.
Reserve definition.
Yeah, reserve definition, just. Not even this. Yeah.
No, even if it is not there, you can ask the question.
The question is, see, in the reserves and surplus, generally the ESOP liability, there will be reserve created. Whether that is included in the net worth. That is my question, because net worth basically.
Here net worth definition, paid up capital,
It
security premium account.
It cannot be included for net worth calculation.
Okay.
Security premium, free resource, balance in P&L account.
Okay.
Then revaluation reserves. In case of assets revaluation reserve cannot be considered for dividend distribution, bonus share issue, buyback of shares, net profit calculation also, CSR purpose or managerial remuneration purpose, it cannot be considered, or net worth calculation also.
Yeah, revaluation reserve ಚಂದಕ್ಕೆ ಮಾಡೋದು ಚಂದಕ್ಕೆ to make the balance sheet appear good.
Window dressing.
Yeah.
Then share options outstanding account. Next slides cover ಮಾಡಿದ್ದೀನಿ sir.
ಮುಂದೆ ಹೋಗಿ.
And these are all the related compliances with respect to ESOP related issue. Then other reserves, I think somebody has asked other reserves. These are all the other reserves. Excludes security premium, retained earnings, contingency revaluation, dividend restriction, net worth exclusion, other reserves. Then what do you mean by surplus? Surplus is used for dividend declaration, bonus issue, CSR computation, net worth, managerial remuneration calculation. Then there are reserve transfer procedures. There should be a board approval or 123 profit eligibility. It should be disclosed separately in the balance sheet. Utilization restrictions are there under this one. Then money received against the share owner. This is next third line item under share equity and liability, sir. So we have completed share capital, then reserves and surplus.
Money received against share warranties in the balance sheet, it will be treated as equity capital only.
Part of equity only.
Yeah.
It is a grant right to acquire equity shares in future. It is not part of the paid up share capital or share capital. It is part of the equity and liability.
Yeah.
Then share application money, next line item is share application money pending allotment. Sometimes we are disclosing under current liability, sometimes we are disclosing under equity and liability. When you should disclose under current liability, when you should disclose under separate line item, what are all the disclosures, and when we should refund that money, read with section 42 subsections is read with deposit rules. In case as a share application, all those cases, current liability we are disclosing, or we don't want to allot, we are refunding it. In those cases, it is disclosed as a current liability. And these are all the disclosures you have to provide. What is the reason for pending allotment, terms and conditions, premium, period for before which we are, what is the due date of allotment. All these things you have to disclose in the share application.
Yeah.
And this is equity and liability is over now. Now it is non-current liability. Thereafter current liability. Non-current liability, there are 4 classifications are there. Non-current liability. Under that, long-term borrowing, deferred tax liabilities, other long-term liability, and long-term provision. Long-term liability, we will discuss first long-term liability. The long-term and short-term, we are clubbing this compliances are same with respect to borrowing, whether it is a long-term or short-term. So we are clubbing both together. Under current liability, while dealing with short-term borrowing, we are not discussing anything about these compliances, because compliances are more or same for short-term borrowing or long-term borrowing, as the case may be. So under borrowing, long-term borrowing, there are classifications, again sub-classification, debenture, term loan, deposit, deferred tax, deferred payment liability, loans and advances from related party. We will deal one by one these things. Debentures, these are all the compliances you have to look into this. Debentures 42, it is a private placement. Then in case of private company cannot issue other than 2 types of debentures. One is compulsory convertible debenture or secured debentures. In case of secured debentures, whether you have to create a charge CHG1, if once charge is created, whether you have to maintain the charge register. Then in case of disqualification of shares, failure to redeem the debenture or failure to pay interest on debenture. In case of any default, then 164 director disqualification for a period of 5 years. Then in case of debenture, whether it is a borrowing, whether it is the debenture, issue of debenture, whether it is in excess of paid up capital or free resource or security premium account. If that is the case, then MGT 14, EGM resolution, MGT 14 filing, all those things, then private company 180 itself is not applicable, provided the 137 or 97 compliances is complied. And under deposit rules, there are some restrictions are there for private company other than private company. The private company secured debentures only eligible to issue. Unsecured debentures, private company is not eligible to issue. Issuing unsecured debenture should be compulsorily convertible. Otherwise, it amounts to deposit. Once it amounts to deposit, auditor will disclose in his report 73 to 77 or 76. There is a compliance certification under Caro point. Caro has to disclose whether a company has complied 73 to 76 compliances. Then these are all the debenture and deposit related compliances company secretary has to take care. Then term loan, these are all the next line item under borrowing. These are all the compliances we have to take care. Term loan, once term loan is obtained, 179 compliances you have to see. Then whether CHG1 filed or not, we have to see. Then register of charges, you have to see. Then index of charges, whether it is updated or not. Then if a borrowing is in excess of paid up capital and free resource, 180 is applicable. 180 private company is not applicable, provided 137, 92 compliances are met. Then term loan, whether there is one confusion, whether term loan, whether it can be considered as a service or it can be considered other than service. If it is a service, whether it is falling under 188. Then in case of default of term loan, IBC provisions.
188 is what?
The term loan, whether it is considered as in case of unsecured, for example, unsecured loan received from the directors or relatives of director, whether it is considered as a service. If it is a service, whether 188 is applicable. Then IBC related compliances, if the term loan is repaid, because many companies we are seeing the balance sheet, term loan may not be there, no loans will be there under schedule. But if you go to this index of charges, there will be some few 4 or 5 charges will be there. And while in the amended schedule 3 in the notes of accounts, auditor has to certify whether company any pending registration or modification of charges are there or satisfaction of charges are there. Auditor company has to disclose in the notes of accounts. But few companies they are disclosing not there. But balance sheet, if you see, balance sheet nil will be there borrowings, but index of charges there are some borrowings will be there. But notes of accounts there will be no registration or modification or satisfaction will be there. So in these situations, you have to educate the company whether these are all the charges, whether exist or not. If it doesn't exist, then it is instead of hunting for new clients, if you go through these compliances, you can educate, then you can get CHG 4 or CHG 1 as the case may be, and you can get additional work out of this do thorough study of balance sheet. You can get some additional services without marketing. Then DPT3, while filing DPT3 before June, we have to consider all these loans. Then in case of loans in excess of this one, MGT 14 compliances, now under GST, I think a guarantee provided among these group companies, it is considered, it is liable as a services, then 18% GST is applicable on guarantee services provided in case of group company. Then 185 compliances, 186 compliances, loans to directors or loans and investment to directors. Then 189 register, there is a register. The register has to be signed by all the directors, and it should be all the other registers. I think one director is signature is sufficient, but in case of 189, all directors has to sign. Then it should be placed before the next board meeting every time. While drafting the minutes and agenda, we have to take care of this all these compliances with respect to loan related point. This is all about loan. Yes, madam, please go ahead. As per 77, it is duty of the company. As per section 77, it is duty of the company.
Sir, if in situation where the charge holder is saying, no, we don't want, what?
Correct, madam. It is duty of the company. Section 77. There are some few cases are there because in case of vehicle loan and all, vehicle loan, they say that it is hypothetical. RTO office, we already hypotheticated, we are secured, something like that. There is a practical situation is there. I agree. But as per section, it is every company, it is duty of the every company to check. Nagraj, Mike. Waterfall mechanism, it will come under last.
Yes, waterfall mechanism will come. So it is on the safer side. The lender has to say that it has to be registered in time. That's what the agreement note cannot be reached once that period of registration is over. That the system will not accept the document even. It cannot be filed even. It will be rendered to an unsecured loan only, always.
But more than 120 days, we are facing this issue, sir. More than 120 days, neither we can file, neither we cannot do anything, and it can be considered. It is considered as unsecured only. But lenders are insisting file.
I was in the Ministry of Joint Commission Policy. We only made it that provision. The thing is that when many of the cases loan dispersed, and that one wanted that bank will not bother about the registration of the document. So after some time, they will go to the various authorities, including CBI and all these, you register against your lender that this fraud is happened. So that's the reason is made you like
economic cover, to avoid economic offence.
So lender has to take responsibility, means responsibility of course for company, but he has to take interest of it. To see that one before releasing the loan, register it and show me the proof. That's it.
Sir, is the filing of charges necessary even if it is taken against fixed deposit? I keep some fixed deposit with the bank, let us say about 10 crores. I take a loan of 4 to 5 crores against that fixed deposit.
Normally, bank is not insisting because lien will be there on the fixed deposit, sir. But section 77 says duty. It is every company is charge on the assets. Asset includes it cash also. Exactly. But bank people, they are secured with lien on the backside of the endorsement.
No, but is the form to be filed or not to be filed?
To be filed.
To be filed.
In case we have taken a sanction for loan, but and we have already filed the charge form, but we have not withdrawn that loan from bank, do we need to disclose that in the balance sheet? That
Sir, balance sheet based on the outstanding limit, outstanding amount in the books of account. So balance sheet does not depend upon your sanction. Balance sheet depends upon your actual utilization.
So, but we can give a note in the like in the notes to account. We can mention that like a loan
Sir,
is
in
sanctioned.
your Schedule 3 only, there are some disclosures under term loan. Everything will be disclosed in Schedule 3 only by the auditors.
In Schedule 3 disclosure, sanctioning authority, the bank or NBFC, their name, interest rate, security against which it is sanctioned, whether personal guarantees are given, what is the repayment period, all this will have to be disclosed under Schedule 3.
Right, sir.
Irrespective whether you have utilized availed the loan or not.
Yeah.
Okay. Thank you so much.
Sir, adding to this question, I will ask one doubt before the audience. He has stated that he has sanctioned, CHG1 is also filed, but he has not utilized the amount. Whether this CHG1 filed before ROC sanctioned limit and all, whether this borrowing will be considered for applicability of various threshold limits for secretarial audit or whatever compliances required on the basis of borrowing, whether it is considered as actual borrowing for the purpose of applicability of various provisions of the Companies Act 2013 based on the threshold limits.
Outstanding as on date. So if you are utilizing, if it is appearing in the balance sheet as outstanding as on 31st March, then it is applicable. If you are unutilized, then...
So he is telling whatever balance is there in the balance sheet, then threshold limit applicability is based on the outstanding balance appearing in the balance sheet.
For example, my sanction limit is 250 crores. I have utilized 90 crores as on date. So next year if I use 100 crores, then for 100 crore, whatever limit applicability compliances will be, that will be applicable for us.
Then I have one question.
After that, I have one question, sir.
Who first?
Sir, senior is always first.
The example you have given is about a fund-based credit facility from a bank. There is non-fund-based credit facility, LC and bank guarantee limits.
Sir, sir, मेरा मुंह का बात छीन लिया सर.
छीन लिया? अरे तभी तो बोलते हैं सीनियर. तभी तो बोलते हैं सीनियर. Against that, there will not be any borrowing appearing on the face of the balance sheet, but it will appear in the notes a contingent liability to this extent of, say, a letter of credit limit, it is utilized, etc., etc. Is it considered as a borrowing for the purpose of computing this threshold limit?
Because it will never appear in the balance sheet, sir.
Yeah.
As outstanding.
The question. Huh? It is not considered. That I am not talking about term loan.
Bank guarantee letter of credit.
1 minute. Your example, you said 250 crore is sanctioned. 90 is utilized. 90 is appearing in the balance sheet as a long-term or short-term borrowing, whatever borrowing. 90 is appearing. In addition to 250 crore fund-based limit sanctioned by the bank, the same bank has sanctioned 300 crores of LC and guarantee, letter of credit and bank guarantee limit. It is utilized by you for issuing to your suppliers, raw materials, etc., to your customers, performance guarantee or guarantee for advance payment, etc., etc. You have utilized it. It is a borrowing. On that, charge is already registered. Okay. But in the balance sheet, it is not appearing in the borrowing. Amount will not be there at all.
It will be disclosed under contingent liability and commitments and notes of.
Disclosure will be there in contingent liability notes. Should that be considered for the purpose of deciding on this threshold limit of borrowing for your various requirements?
Threshold limit applicabilities.
Threshold limit application, that is the question. Don't say you have to go to same bank and then avail the limit and come back and answer.
But balance sheet outstanding amount may not be there.
In the balance sheet, it is borrowing.
Yes, turned other ways. He has turned other way, sir.
No, he has not turned other way. He said on fund-based limit, it is not 250, 90 crore only.
You mean to say fund-based you have to consider, non-fund-based you should not consider
No,
threshold limit?
not that. Fund-based you consider 90 only because 90 crore is only amount utilized there, availed there. Non-fund-based, you against 300 crore, you might have availed only 200 there. That 200 has to be considered, he says. Though it is not in the balance sheet as a borrowing, notes it is there. That has to be added, he says. It will be 280 crores borrowing.
But bank guarantee only my liability will arise only when other party defaults. If other party is not defaulting, then it is not my liability. It will convert into borrowing only when it is crystallizes. That's why we are showing it as a contingent liability. We will cover in next slide, sir. Coming slide. So separate slide is covered in that for that also, sir.
Yeah. What is the question? Next slide, please.
Sir, one question, a practical issue. A company has taken a loan and the asset is being mortgaged. But right now, 120 days has been lapsed and the company is not able to file CHG1. So right now, that loan, as on 31st March, the CHG1 can't be filed. So where do we report this loan as? Either as unsecured loan and keep it there, or either I have to go for condonation, file my CHG1 and then...
There is no condonation concept after 120 days now.
Okay, so how
only
do we...
for condonation concept is there, only for satisfaction of charges. Your question has been answered already by Sajivan sir, former ROC of Karnataka.
Okay.
What is that answer? Repeat it.
Yes. For the benefit of all, earlier we used to, there was a registration of charges or modification of charges. We used to file till 300 days, more than 300 days. We used to go to regional director Hyderabad for getting all this condonation. Now he has stated that why they have Minister of Corporate Affairs has changed from 300 or condonation concept is removed and 120 days because it is a duty of the banker to register the charge. Few bankers are not registered in the charge at all. Only in case of liquidation, they used to raise this issue and they used to file a complaint before CB or some economic offence wing. Kindly make a complaint against this fellow for default of loan. So because of this, it is a duty of the bank. So hence it is a warning to the banker to insist for charge creation within 1 to 2 days. Otherwise, it will become unsecured loan. In case of unsecured loan under liquidation, waterfall mechanism will come under last stage.
Okay.
LIFO method.
So it's
Correct,
unsecured loans. Okay.
Nagaraj, you can give mic because it's an important question for everyone. Nagaraj, mic.
So, in the
go ahead, sir.
In the interim, where charge is not registered, it is not secured debt. That is the message.
Correct. That's why every banker is insisting for charge creation in order to get a secured, that waterfall mechanism, first priority, second priority, whatever waterfall mechanism is there, in order to secure the trend. Please go ahead, sir.
So this is one of the Vijay Mallya's companies. I don't want to name it, obviously. It is under liquidation.
Company's name you don't want to name?
No. But it's a factual case. And
sir, everybody understood,
yeah,
sir.
Company is in liquidation. 6,000 crores have been taken by lead bank, State Bank of India is a lead bank. I can make that to disclose that name as a bank. And the company has not registered, the bank has not registered the charge. So there was a fight was going on between the OIL and State Bank of India. OIL is, as per the provision, OIL is said that since the document is not registered with ROC, that time it's not even 120 days, it should be treated as unsecured creditors. And the High Court has approved it. So it is remain unsecured only. And the accounting treatment is, maybe earlier might have shown in secured creditors, chartered accountant and statutory auditor can reclassify as unsecured creditor after this. But the position is same on, unless it is charge is registered, it remains unsecured only. And at the time of winding up, no hope at all. It is only after settling all the creditors, secured creditors and all workers and
if left out is there?
Yes, everything that is there is a 529 is there, that one. Then only they get the last chance to get the amount.
Yeah, before shareholders.
Yes, before shareholders.
You got your
that
answer, madam. Vijay Mallya versus Karnataka High Court, some OIL case you can search in the Google, you will get it. You will
not get that case. This is not Vijay Mallya versus.
Okay.
If you go to Ramaya, you will get many cases for this one.
Fine. Yeah.
One company takes a loan against other company property. Then who has to file the CSG ones?
Due to Section 77 duty of the if asset is charged, whose assets?
It's a company
If
takes
an asset
loan.
is charged by if a loan is taken for the assets charged by the company, whose assets is charged? That company has to file.
No. To make it more clear, there is company A, there is company B. Company A has taken the loan, but for that, security is of company B.
B has to create a charge, sir. Because B's asset is charged.
Not the answer.
So A does not require to do anything.
A's assets is not at all charged.
A does not have asset at all. That's why he went to B.
But otherwise, company would not have gone to the B. Bank will assist. Bank look out. Deposits next, sir. Term loan. This one also deposit. These are all the deposits related: sales tax deposit, GST deposit, security deposit, rental deposit.
Yeah.
And it will come under DPT3. It will have impact in DPT3. DPT3 you have to disclose all these deposits, security deposit, rental deposit under while filing DPT3 forms.
Now all non-current liabilities only.
We are still under non-current liability.
Yeah.
Then the next line item, loans and advances from related party. These are all the loans and advances from related party compliance as far as Companies Act is concerned. In case of unsecured loan from directors, relatives of director or member, they have to give a declaration stating that they are not borrowed and lent it to the company. It is out of their savings. That declaration we have to receive. Then disclosure of director interest in case of related party transaction, over and above more than paid up capital and free reserve security premium account, 180 compliances, 188 again a question mark. Then board meeting, whether board meeting we have to conduct, whether general meeting we have to conduct. In case of private company, whether shareholders company, whether private company can borrow from shareholders, members. If a members borrowing, whether the board meeting is sufficient or ordinary resolution in general meeting is required. Then EOSU 2 is required, DPT3 compliances, then MGT 8 there is a separate compliances certification. Then 186 lending company with respect to lending body corporate, due diligence report, RBI due diligence report, every half year you have to report all this separate schedule should be provided in the due diligence report. Then board report, I think there is a column, there is a separate paragraph as far as unsecured loan from the directors, relatives and members, you have to disclose separately in the board report. And in the balance sheet also you have to disclose separately loans from directors, members, relatives of directors with respect to private companies concerned. These are all the compliances requirement as far as loans and advances from related party is concerned. If anything is there, you can add it, sir, please.
Relatives and related party. Relatives definition we are all familiar. Section 2, subsection 77. I am giving you an easy way of remembering the relatives' names. A tip. Old school we were taught that. Father and mother, spouse, sister and brother, that is sibling, children, their spouse, HUF. These are the relatives. 6. Look at this section, easy to remember. Depending upon your taste, you can change the fingers for remembering the names. I said father and mother, you may have spouse coming first there. It depends upon your family arrangement.
No further discussion, sir. We will move on.
Okay, good.
So loan default related provisions. These are all the loan reporting in finance statement. All this loan defaulting, it will be reflected. Then AOC for auditor will qualify. Then AOC 4 there is a separate column. Auditor, all whatever auditor qualifications are there, we have to give a remark in the AOC 4 form. Then in past 4 offer letter we have to disclose separately. Is there any mandatory loan disclosures are there? Then there is a threat of IBC in case of loan. Whether default of loan and default of interest on loan, whether there is a disqualification of directors, or disqualification of director is not applicable in case of loan default or interest on loan. Then 186 restrictions are there, loan there is 60%, 100%, 186 restrictions. Then in case of default, whether prior approval of the financial institution is required or prior approval of the financial institution is not required in case of 186. If required, in what cases it is required?
Prior approval for defaulting or what?
So prior approval, whether required or not from the public financial institutions. So if it is required, in what cases it is required? There are 3 or 4 situations will come. Under which situation it will come? Then in MGT8 there is a impact in MGT8 also. Then, so last leg of this current non-current liability. This is the other long-term liability, trade payable, others. So trade payable, others. Then the trade payable in case of this one MSME form. Now MSME form outstanding loans, so whatever MSME form we are disclosing a one amount and the balance sheet it will be some other amount will be maybe there. There is some differences may be there. Then in case of trade more than 365 days trade advances, there will be some implication under deposit rules. 365 days, more than 365 days, there are with subject to some exemptions. Then 188 there is a related party in case of long-term liabilities, 188 related disclosures or compliances with respect to based on the threshold limit. Then AOC2 with respect to 188 compliances, AOC2 we have to consider.
Yeah, due to MSME, more than that 45 days, interest provision, interest paid, all this will have to be disclosed.
Other current liabilities normally where the dividends will be disclosed on unpaid dividend, these are all the compliance we have to see 7 days, 30 days, 12% interest, after 7 years it should be transferred to IEPF. Then once it is transferred to IEPF, you have to file IEPF 1, IEPF 2 after AGM, some compliances are there. Then nodal officer, deputy nodal officer appointment in case of IEPF. Then in case of dividend, unpaid related dividend, in case of transfer of shares, you cannot transfer to dividend cannot be paid in case of pending transfer. It should be transferred to, it kept in a separate bank account, something disclosures are there. Then MGT8 there is a separate certification point for dividend related compliances, and board report separately we are disclosing dividend related compliances in the board report. Then delay in transfer to unpaid dividend account, 12% per annum interest we have to consider. Unpaid mature deposits, debentures, there is a separate line item under balance sheet. These are all the implications as far as company secretary is concerned. The default in repayment of debenture or interest, there is a threat of 160 for the director disqualification. Then 167 is deemed to be vacated. 164 read with 169 is deemed to be vacated. Then 186 subsection 8, no further loan guarantee security investment restrictions is there. In case of default, you cannot do further investment under 186. Then deputy 3 also it will come. Then disclosure in offer letter PS4 we have to disclose all these disclosures. Then MGT8, MGT7 there is a separate certification or column is there under MGT8, MGT7 what and all unpaid mature deposits or debentures are there in as far as balance sheet, as far as company secretary is concerned. Sir, if anything is there, you can add it, sir.
Fine, more.
Then calls in advance. Section 50 talks about calls in advance. It is classified as a current liability. There is no voting rates until calls is officially made. Amount received before call is due is called as calls in advance. Then interest is payable. Interest is payable as per calls in advance interest at 12%. Calls in arrears 10%. There is a mandatory and discretionary clauses as far as calls in arrears, calls in advance is concerned. This is all about liability.
Liability side.
Now time is 7:20, sir.
All right. We will continue with the assets.
Yes. If any clarifications or doubts, I think we have to request first floor and second floor, whoever is sitting at this one, if any doubts are there, then you can come down here and you can discuss here itself.
Or they can send a chit also.
Chit also, or there are a few chairs are vacant, they can come and sit here also, sir. There are a few chairs are there. Yes, madam, please go ahead. Madam, list you have to disclose compulsorily whether you are having a transactions or not.
Irrespective of
Irrespective of transactions, you have to disclose related party list.
Thank you, sir.
Transaction.
Because they are not.
It is not as at the end. It is even 1 day, 1 hour also, if everything. So asset side of the balance sheet. Asset side of the balance sheet classified into two: non-current asset, current asset. Under non-current asset, these are all the classifications: property, plant. I think it is not visible. Property, plant, equipment, intangible assets, non-current investment, deferred tax assets, long-term loans and advances, other non-current assets. There are 5 classifications under non-current assets. So first one is property, plant, equipment and intangible assets. These are all the compliances under, as far as company secretary is concerned, in case of property, plant, equipment, first schedule. Whether asset is charged for the bank loan, then you have to file CHG1 with respect to property, plant, equipment. Then in case of debentures, secured debentures, debenture related provisions, you have to comply. Then there are some ratio analysis is there. There are 11 or 13 ratios you have to disclose under notes accounts, those ratios.
11.
Then audit report, auditor has to certify in clause number 1 itself with respect to fixed assets. He has to certify whether title deeds are held in the name of company, what is the deviation, all those things are there.
Physical verification.
Physical verification. There are 3 clauses are there under CARO, clause number 1. Then 187 investment to be held in its own name. 187, 192 restrictions on non-cash consideration, already we discussed. 276 relative definition, relative and 188. Then 221 NCLT order to freeze assets in case of disputes. Then 230 valuation related in case of mergers. Then title deeds, notes accounts we have to show separately in case of promoter relative relatives with as per section 216 and 277. So this is with respect to fixed assets. Then move on to next one, non-current investment and current investments. So these are all the non-current investment and current investment line items. Property, equity instrument, government trust and security, mutual fund, other non-current investment, partnership firms, debenture, bonds, preference shares, all this considered as non-current investment and current investments are disclosed under asset side of the balance sheet. And these are all the, one by one we are analyzing this compliances of this non-current investment and current investment. 185 you have to take a prior approval of a public financial institution if a loan is exist. Then 186, 187 within limit board approval, exceeding 60%, 100%, 187 MGT 14 requirement. Then interested director should not participate as per 184. Interested director whether should participate, should not participate, whether if participated, if voting, whether voting is considered or not. Then there is a register under 186. We have to update the registers. Then under 186 subsection 1, 2 layers of subsidiaries. Form CRL
one
or something.
Important question, sir.
Yes, sir.
Interested director and his or her participation in the proceedings of the meeting. Should that interested person continue to sit in the boardroom or he should go out of the boardroom? Out of the boardroom. Very good. He can be present, but he should keep quiet, he should not talk. He cannot vote is fine, he should not talk.
Sir, I will scold, sir. I will start scolding on him. He should keep quiet.
He can listen. He can listen. He cannot speak. Sorry?
Sir, there is an exemption under 5th June 2015 notification.
There, I agree. I agree. There is a special clause about that. Otherwise, I am talking about.
It is embarrassing moment, sir, if somebody is holding in front of me only.
But you have to listen.
And the moment if you see investment in some shares and other things, these are all the compliances where you should see whether it is associate some company or subsidiary company or joint venture company. Then if it is an associate joint venture, then consolidation is applicable, AOC1 is applicable, then then the 89 compliances is applicable, beneficial interest, then 89 compliances, then MGT 4-5 compliances, AOC4 CFS you have to file along with AOC4 in case of other than ex-barrel. In case of ex-barrel, it will come in single file. All these compliances you have to see.
Yeah.
And next one is loans and advances, long-term and short-term we are clubbing together. Loans and advances, always you should take a board meeting approval, not by a circular resolution. Then 185 compliances, 186 compliances, 117 there is a separate requirement of filing MGT 14 before ROC in case of public company. In case of private company, there is exemption notification dated 5th June 2015, read with 13th June 2017, there is exemption notification. Then related party, whether it is a related party or not, depending upon threshold limits, you have to pass general meeting or board approval as the case may be. Then relevant registers you need to update as far as company secretary compliances is concerned. Loans to directors, these are all the 185, there is a restriction. So this is the exactly section we have repeated, I think. We'll move on. Then cash and cash equivalent. Unpaid dividends, we are considering it under cash and cash equivalent under earmarked balances with banks. So for this highlight only, we have added this slide.
Earmarked balances with bank means says for some of the credit facilities, bank may insist for having some FD provided as security there. Maybe margin for LC, margin for bank guarantee, or in case of overdraft, some say 25% of the overdraft, you should deposit as fixed deposit. These are all, though bank balances, cash and cash equivalent, it has to be shown separately. It cannot be clubbed along with all the other cash and bank balances. It has to be shown separately, indicating that there is a lien on those deposits.
So this is all about balance sheet. If anything is there, you can discuss about balance sheet, sir. We will not go to next P&L account.
Any question? Yeah.
Annual filings only. There was a bank overdraft facility which was in asset side because it was a negative. So how do we consider in borrowings for filing DPT3? Because the auditor or the person, they did not file it. And that was a question mark raised for certification of MGT8. So how do we deal with this? The bank overdraft, usually it appears in the liability side, but sometimes last year it appeared in the asset side.
I think basic fundamental.
So that's not a bank balance, sir.
No, question is fundamental question, but answer should be there, no?
Sir, that OD account, always it should not show debit balance.
Yeah,
that's all right. But you see, that day, 31st March, just before, one day before, huge money is received and deposited in the account. It has turned into
but
positive.
how do we file for borrowings then?
It's of debt balance. That situation will arise. Yeah. Is he answering your question?
Yeah.
Or he is asking further question? Sir, you answered her?
That debit balance should be shown under cash and cash equivalent. That whatever the extra after offsetting the entire overdraft, whatever is there as the extra cash, that should be shown under cash and cash equivalent.
That is all right. Her question is not that. That is practical question. What is that? How to file that form?
Sir, because because that was a question for MGT 8 certification also, sir.
Yeah.
That's why.
That is the auditor's mistake.
No, it is not a mistake.
No, it is not mistake.
Sir, it should appear under cash and cash equivalent. It's a debit balance.
So it is appearing in asset side only. It is appearing in asset side only.
Sir, there is no.
Sir, with respect to your query, it is already disclosed properly on the asset side under cash and cash equivalent only. Her query is, how do we file this form?
How do you file it and certification? What has to be done?
How company secretary in practice has to issue the MGT 8? There is a query by the PCS while issuing the certificate, she is asking.
What is that query? PCS. What is the query from PCS?
The query is because it was not showing on the liability side, that's why they did not file it.
They did not file it.
Yes.
So they did not file only.
Yes.
The problem is not with filing. They are not filed at all.
Yeah.
This is another dimension to the problem. They should have filed it. See, though on the balance sheet date it is showing debit balance, it is under assets. In the notes disclosure, there is bank or financial institution's name, terms of sanction, interest rate, repayment, security, all those things are disclosed in the notes.
Correct.
They are all disclosed in the notes.
Correct.
So the filing should have been done. Just because it is not appearing on the face of the balance sheet, filing is not done, that is a lapse. It should have been done.
Okay.
I think I have answered most part of your question.
Yes, sir.
Good.
Thank you.
Move on.
We will move on to P&L statement, sir.
Yeah.
Balance sheet is over now.
Yeah.
This is the format of the P&L account. This is the sometimes P&L account format. As I told earlier, we can modify here and there. For example, AS24 accounting for discontinuing business, it should be disclosed on the face of the balance sheet. That's why there is a modification, profit and loss from continuing operations, discontinuing operations, which is not there in the Schedule 3. But because of accounting standard, it is modified in the P&L account statement on the face of the P&L itself. So first it is a credit item income, then thereafter expenses. Revenue from operations, it will have an impact income. It will have an impact on CSR, internal audit appointment, CARO report, CFS, XBRL, cost audit, MGT8, internal financial control, dematerialization, and other applicable provisions. Then disclosures, we are disclosing this turnover matter in JOC for MGT7, MGT7A, 188. Based on the threshold limit, you have to calculate your board resolution or ordinary resolution. Then donation, 181 donation in excess of 5%, we have to pass board resolution or general meeting resolution based on the 5%. Then political contribution, whether 7.5% it is there or it is not there now. Not there. 7.5% political contribution, more than 7.5% it is prohibited, or general meeting, or within 3 years of incorporation you cannot give, or government company it is not, you cannot. But in the, I think in the somewhere we have deleted, I think Companies Act amended and deleted 7.5%, and we need not disclose a name of the political party and amount, something like that, whether still it is there or it is not there. If you go to e-book or any Companies Act book, it is not there. But practically, it is already restored by the Supreme Court under a automatic democratic ADR versus something. Prashant Bhushan has argued, and that whatever amendment to the 181, it is restored back. But it is not there in textbooks. Textbook says it is a star deleted, something like that. But it is already restored under ADR case law and pronounced by the Supreme Court. Then it is a revenue from operation. It is considered
one
for.
Minute, sir.
Yes, sir. Please go ahead, sir.
Supreme Court order is there for restoring, but restoration has not yet happened.
Sir, it is struck down. Amendment itself is struck down.
Amendment is struck down. Then the e-copy has to be modified.
Sir, Nagaraj, you can just give it a mic to sir. So he will add something.
Sir, if you see that section 182, though the matter has been taken up many times, almost all the provision has been diluted. Okay, the provision penalty has been reduced, or instead of compounding is adjudication process. But if you see that this particular provision, it is non-compoundable, non-adjudicable. It is a criminal offence.
Non-compoundable.
Yes, 6 months the director has to go inside. In addition, 5 times of penalty. By seeing the provisions, that one, it's only single. Now that if you consider that is 2017 notification not even by the Minister of Corporate Affairs, it is for the Finance Ministry circular. So if you see that one, only 2-3 things are recorded. One, board has to pass a resolution and authorize the MD to decide the amount and show separately in the profit loss account and expenses a political donation separately. Many of the cases with heartburn, I prosecuted the company and directors by not disclosing separately in the profit loss account as a political donation. They said donation. So I don't think so. This provision has to amended. That is, I think so. It is provision has to amended that one. Like any other, it's a small technical violation. It is not. There is no need of attracting so much of violation, so much of penalty in this case. Now, as you rightly said, sir, that is since Supreme Court has struck down that one, better all the company for 24-25 disclose all these things, including the names of political party where it has been given. Because that amendment was taken with this obvious reason, that one. Names of political party should not be given. Earlier also we saw that in 1956 also it is mentioned that names of political party should be mentioned. Now, better all the company has to insist that one, in the notes to account, let it be a name of political party where it has been given. That's
not only 24, 25 onwards, sir. I think in the judgment
came
in
further. Now it is the first
judgment came in the month of January or so, sir.
Okay.
January or so. So for 3 months period also it
should have been. Now at least 2024-25 can be taken care of.
Obviously.
Okay. My question is that it is high time to, because I am going to write an article on that one. It's high time to amend the provision to make it as adjudicable, that one. Not the prosecutor, criminal offence. There is no criminality involved in this.
Correct.
Thanks.
So on this point, disclosure is what Mr. Sajivan has recommended. Not only for this, any point, any clause where you have some doubts, disclose.
When in doubt, disclose.
When in doubt,
disclose. Sir, maybe adding to your point, sir, because of the electoral bond, this section become redundant. I think now we should think of amending this one because of electoral bond. I think this section was not used by many people because it's electoral bond was circumventing these provisions. Then this revenue from operations we are considering for 118 limit and 186 limit also based on the free reserves. Then other income. These are all the 186 other income, interest income 186 limit you have to calculate. And dividend received, in case of dividend received, which you should consider under 180 or other income provisions. Then there is a NBFC, I think there are two NBFC, one company shall be considered as NBFC, classified as NBFC. So there are few companies are there, their turnover income may not be there, main revenue from operations may not be there, but other income is much more than revenue from operations. Their financial asset investment is much more than non-financial investment, whether NBFC classified as NBFC. Caro report says 45 IA, auditor has to certify 45 IA whether complied or not. All these things you can go through in the balance sheet, other income only we can go through. And few companies, it is in the slide, it is not there, we will add it in the next time. In the director's report, in case of change of business, in the director's report we have to disclose. Few companies, they have started some business and main object may not be there. They are disclosing maybe in the revenue from operations or other operating revenue or other income, but main object may not be there, or in director's report may not contain change of business. So those things, then the CSR related other income, it may come, other income, it may not, it can be clubbed in the CSR expenditure, part of the CSR itself. Sir, if anything, you can add.
No, it's fine.
Then these are all the income expenses. These are all the alignments you have to do in case of expenses while drafting the minutes or while issuing the MR3 or MGT8 or MGT7. Align with directors and KMP remuneration with RPT schedule, because in P&L account RPT total remuneration will be something else, and in the RPT notes account remuneration will be differently shown.
sometimes maybe typographic error, then compliance with 197 Schedule 5, remuneration Schedule 5, 196, 197 Schedule 5, that 5%, 1%, 3%, 11% in case of public company, in case of private company, as per the board resolution. Then officer place of profit, if a relative is drawing remuneration more than 2,50,000 per month, officer place of profit, below 2,50,000 per month, board approval, more than 2,50,000 per month, shareholders approval, EGM is there or not, whether board approval is there or not, whether it is disclosed in the AOC 2 or not, then comply with the 50, 54, 62, 185, 188, then disclosure disclosure in the AOC 2, then 197.12 Rule 5, I think 8,50,000 per month or 1 crore 2 lakhs per annum disclosure, whether it is there or not in the director's report, separate annexure is there or not in the director's report, where we can comply by seeing this P&L account. We can have many compliances, whether company has complied or not, as far as PCS is concerned, as far as Voltaigne company secretary is concerned, by going through this. Then if you go through this other expenses, because many companies other expenses they are clubbing it, whether other expenses, whether CSR shown separately as per schedule, because CSR cannot be clubbed under other expenses, we should disclose in the separately. Then in notes account CSR, there is a separate disclosure you should provide for 6 or 7 items you have to disclose in the CSR. Then it should match with our CSR board annexure, CSR annexure, what we are preparing, what auditor is disclosing in the CSR notes, CSR related disclosure in the notes. Sometimes what we are disclosing is altogether different from what auditor is disclosing in the notes accounts. Then 135 compliances, now it is part of the auditor's report. 135, auditor has to certify whether 135 complied or not, whether unspent amount is there, whether ongoing, other than ongoing. Then donations we already discussed. Then auditor fees. Sometimes if you go through this, some of the minutes and all, auditor fees will be there, but related resolutions may not be there. Yeah. Because always auditor fees should be, in case of audit committee should recommend it to the board and board should approve it. Before that, general meeting, either general meeting should fix it or general meeting should delegate the authority.
To the board. To the board.
To the board or to the manager, whoever, sir, whatever general meeting decides. Sometimes general meeting is authorizing to the managing director also. Whoever delegates. Then whether audit committee recommendation is there or not, wherever.
When a general meeting authorizes the board, many think that is the end of it. Then in the board meeting there will not be any resolution fixing the remuneration to the auditor.
Sir, board should recommend it to the shareholders. Audit committee should recommend, board should recommend, then thereafter shareholders will decide.
Shareholders, they are appointing the auditor, fixing the remuneration, they authorize the board.
Normally, sir.
They do not fix the remuneration there, auditor's remuneration, and board never considers it as one of the items during the whole year. Fee is paid. Then what?
Then if you see the P&L account, then there are some auditors, they are giving other than audit services, whether 144, whether the prohibited transactions, whether they are rendering services or other than permitted services. If it is a permitted services, then they have to comply 144 audit committee approval or board approval, as the case may be. Then political contributions, we already covered recent SC judgment versus political contribution 182. Then other expenses, you cannot club it all under other expenses. Some expenses you have to disclose separately. 1% of revenue from operations or 1 lakh, whichever is higher, needs to be disclosed separately. You cannot club it.
As a separate line item in the notes to accounts.
Now this is, as far as company secretary is concerned, this is with respect to P&L account, sir. Now cash flow statement, I request you to take.
Cash flow statement. It means what? Is it visible there? Is it visible there? Can you read that statement? You cannot.
Skip, sir. So if it is not visible, we will go to next slide. I am expert in moving to next slide, sir.
Move on. Cash flow is under 3 main headings. Yeah. From operations, from investment activities, from financing activities. 3 major heads. Then sub-line items are there. Next slide, you can go to next slide.
Thank you, sir.
Yeah.
Only thing I can add one value, sir. This cash and cash equivalent should match with your asset side of the balance sheet, cash and cash equivalent. That much only I know.
Opening and closing balances. I add to what he says, it has to be matching in respect of opening as well as closing balance.
That much I can contribute in cash flow, sir.
Yeah.
So there is I think this is the fourth leg on our 240 definition, 2 subsection 40 financial statement, changes in equity. First one, balance sheet completed, P&L account completed, cash flow. This is the fourth leg of the definition.
Yeah.
Changes in equity format.
Changes in equity format. Changes in equity in balance sheet. The first heading, equity, before non-current liabilities. That first group, it gives the detailed breakup from the opening balance, that is previous year's closing balance, then during the year what all has happened with respect to addition, whether it is capital or reserves, all those accounted additions, deletion that has happened here will have to be recorded, and this statement should be part of the financial statements as per section
2 subsection 40. Sir.
2 subsection 40. This is the fourth statement there.
So under definition, last leg is notes to accounts.
Yeah, that most of the parts we have covered. We may have some. Yeah.
Before that, I think, madam, you can tell me what is your doubt.
I have a doubt, sir. See, I mean, not connected. This cash flow statement, small companies are not required to give cash flow statement.
Small company, OPC company, dormant company, private startup companies are exempted.
Exactly. But see, I was discussing with somebody. I have a doubt in my mind. I would like to have it clarified by both of you. See, is the definition now it is 4 crores of paid up capital?
4 crore, 40 crore.
40 crores. Is it and or?
And, sir, it is already fourth removal of difficulty order. They changed it from or to and. Fourth removal of difficulty order, if my memory is right, or seventh removal of difficulty order.
That is and.
And, sir, it is
That
always
means
and.
you can have 50 crores but less than 4 crores paid up capital. Then you are still a small company.
It is other way, sir. It is other way, sir. If you comply both conditions, then you are small company. If you comply any one condition, then you are.
Okay, fine. I understand. Thank you very much, sir. Thank
you. The other way, in the 2014 or 15, fourth removal of or seventh removal of
so
difficulty
it is
order.
either or.
And
that means it should be less than 40 crores. It should be
yes,
less than 4 crores.
Both, in order to come eligibility as a small company.
This was my opinion. Somebody told me now it has to be both, even one.
14, 15 removal of difficulty order, you can see, sir, we will get an answer.
Okay, thank you.
Yes, madam.
Sir, regarding CSR, we need to, our liability, the company, if company pays to an organization who is under CSR, like before 31st March, but that organization has not used that fund till 31st March, then what will be the effect? They need
but the
to
effect is same,
use it before 31st March. They need to use.
It is a principal and agent concept.
Because
it is a principal and agent concept. If agent has not spent, then it is treated that it is a principal has also not spent. It is as good as same.
Yeah, if the party to whom you have paid, they have not utilized it before 31st March, it is as good as you have not spent CSR.
He should also spend before 31st March.
Actually,
if he is not spending,
many,
then it will be treated as unspent in your hands also.
Because many of them, to whomsoever I have asked, discussed, all have said, all the company's secretaries said that no, they need to use, if they have not used till 31st March, you need to take that money back to the company and then you need to put in Schedule 7.
That is what the that is a correct approach.
Correct.
That is a correct approach. But
correct
no one will pay.
Procedure.
No one will
They
refund.
pay you back.
That is a
He
different
says
story.
They will not pay you back.
It
is transferred to Prime Minister's relief fund, then it is not.
That need to be done after 31st March only.
No, before 31st March.
So we will move on,
You are
sir.
right. There is one question.
Sir, another 10 minutes is left out.
There is one question.
Yes, sir, please.
ಮೈಕ್ ಕೊಡಿ ಅವರಿಗೆ. Statement of
So in statement of changes in equity, the components which comes under other equity, can we change that presentation that into rows and other items? If you can show
Horizontal to vertical, vertical to horizontal, you are asking.
That can be done. That liberty we have.
It can be done.
Yeah.
As far as minimum content disclosure is there, it can be done.
Okay. Thanks.
Notes accounts, last leg of the section 240. Notes accounts. These are all the contingent liability. I think we were discussing about guarantee and all, sir. So until it crystallizes, it will be disclosed in notes accounts under contingent liability. And contingent liability, we can come to know this disputed dues, lawsuits, warranty claims, and under CARO also there are some compliances we have to take care by going through this contingent liability. Then the auditor's report qualification, board has to give a comment in auditor's report compliances and guarantees. I stated next slide it will be covered, sir. Here guarantee question is covered, 185, 186, 188 compliances, 179, 114, 17 SS1, SS2 compliances.
Let us move to next slide, please.
One 141 auditor is not eligible for appointment. There are some disqualifications points are there. Then statutory registers has to be updated. 189, all these things. There are under 20, from 21, 22 onward, there are some additional disclosures under notes to accounts, willful defaulter. I think while certifying this DD report, RBI DD report, PCS is struggling to get this willful defaulter list. Here also they have mentioned willful defaulter list. Section 248, relationship with stuck-off companies separately needs to be disclosed. Layers of subsidiaries, we already discussed at this point, is separately disclosed. Merger and amalgamation separately should be disclosed. And Forex, whatever we are disclosing for earnings or income relating to Forex, it will have an implication under board report, foreign exchange, conservation of energy, foreign exchange. It should match sometimes whether there it is a receipt basis or here it is accrual basis, because these people, auditors will disclose in the balance sheet accrual basis. In under board report, we are disclosed under receipt basis. Some differences are there.
Differences should not be there. Huh?
Sir, in balance sheet, we are Forex is always disclosed on accrual basis, but in board report, it is on receipt basis, I think. So there will be, but we are not getting receipt basis, no one will provide. We are also copying, pasting same, whatever disclosing the notes accounts, we are disclosing in the board report, same thing. Otherwise, we will never file this balance sheet for another 1 year if you insist for this one. Then other disclosures relating to charges, 77 charges, CSR disclosures in under 7 or 8 points. Then 77, 78, 82, all this relating to registration of charges, modification of charges, or satisfaction of charges related. Then 180 borrowing in excess of paid up capital, 134 related disclosures as far as board report content is concerned, we have to disclose. Then CSR disclosures, these are all the CSR disclosures, and it should match with our CSR annexure and CSR 2 annexure. Then it should match with P&L account, all these amounts we have to match.
Our CSR annexure means what?
Sir, there is annexure to the board report, CSR annexure. In addition to farm number CSR 2, what we are filing before 31st March.
So the board annexure to board report is our annexure.
Yes, sir.
This is whose annexure?
This is notes accounts, balance sheet, financial statement annexure, sir. Okay. Notes accounts, part of the notes accounts.
Okay.
Ratio analysis, there is some separate disclosure under ratio analysis. You can throw light on ratio analysis, sir.
March 24, 2021, this new disclosure requirement has come in. There are 11 ratios that need to be disclosed in the financial statements, 11 ratios only. Whereas as part of analysis of financial statements for today's seminar, we have listed out many ratios, because it is not the legal requirement only we talk about. We talk about analyzing the financial statements from different perspectives, different purposes, different angles. All those slides are there. We also have a mandate to end the session by 8 o'clock.
Because dinner is waiting, sir.
Now, dinner is waiting. Yeah.
That's what our vice chairman told me.
Dinner is waiting. Yeah. Yeah, dinner is waiting. Don't worry, it is waiting for us only. Yeah.
Correct, sir. No one will come.
Nothing to worry about it. This ratios, last one, 11th one, return on investment. My observation, some companies calculate it as profit after tax, PAT, divided by capital invested in the company. Return on investment. But guidelines published by Institute of Chartered Accountants of India talks differently. It says here the return is income on investment made by the company. Income on investment made by the company, whether it is in some debentures, some shares, etc., mutual funds. Only those incomes will have to be considered as a numerator, and the amount invested, that is average amount invested, opening balance plus closing balance divided by 2. That should be the denominator. Two kind of practices are there. If you ask me what is right, what is wrong, both are right, because the requirement by this 24th March 2021 amendment is name of the ratios. Then it talks about the company shall explain the items included in the numerator and denominator for computing the above ratios. When these numerator, denominator are explicitly written there, it makes the reader to understand properly. That is the very purpose. Variation from previous year to the current year in excess of 25% in value will have to be explained with a reason and note there. That is another requirement on this ratio analysis. Next slide, can we have a look at what it is?
Sir, I am expert in moving to next slide.
Oh.
Something came.
Move on. 1 minute. 1 minute. Yeah. No, tools. Before that. Tools for analysis of financial statements. There are many tools available for us to analyze the financial statements. One is fund flow statement. This is not the requirement of Companies Act, but from the point of view of analyzing during the period of 12 months from where the fund has come in, different account heads. If we can limit it to 5 main account heads on the liability side, then on the asset side, 3 or 4 main groups there. That will help us to analyze from where the money has come in and where it is utilized, what is the change during the year. Ratio analysis, in addition to the 11 ratios prescribed under Schedule 3, there can be 20, 30 different kind of ratios. The lists are there, and we may have to have another session. We will request the Vice Chairman of the Bengaluru chapter and the Chairperson and the committee to plan another session on ratio analysis alone.
Sir, other slides, it may take another 4 hours or 5 hours.
That's all right. I only said another session. I did not specify the duration. Fund flow statement. Before that. Before that. Yeah. Common size financial statements. This is another interesting aspect of analyzing the financial statements. How many of you have heard this description? Common size financial statements. Yes. Only one hand has gone up. It is simple. Whether it is Infosys size of a balance sheet, Reliance size of a balance sheet, or just a SME which just a 20 crore rupees total value of the asset and liabilities. In common size means they are reduced to percentage terms. Total value of liabilities is 100, total value of asset is 100. Each component of the liability side is expressed as percentage of that 100. It adds up to 100. Assets also similarly adds up to 100. Easy for our analysis. Out of the total assets, how much is in fixed asset, how much in current assets, how much is in non-current asset. This kind of analysis, it is possible. Common size financial statements, comparative financial statements, comparison periodically of the same enterprise, comparison of that enterprise financial statement with its competitors in the same industry, comparison with not competitors but in the same industry segment who are at the high end. For example, it is a EPC company. Small scale company is one league. Then we have these L&Ts, ABBs of this world who are at the high end. Even their statements can be compared with this statement because volume does not make any difference. We are talking about common size. That will be helpful. It is 8-1 with I take this opportunity to thank Bengaluru chapter of ICSI, the managing committee for organizing this event in a grand scale. I was told today afternoon that more than 280 delegates registered. All-time record in history of Bengaluru chapter. We are part of that history creation. I take this opportunity to thank CS Vijay Kumar Sajjan in particular and who assisted for this research. These are all the team members. Please stand up and great effort. I appreciate all the participants liked it, and in the process you also have learned a lot. Thank you very much. Thank you, sir. Thank you. There were some papers distributed along with the delegate kit. It is about one medium-sized company, Arthur Solar Limited. Their ratio analysis statement and elements of ratios, one document. Other one is Infosys Limited, ratio analysis. And third one is Dev Prakash Associates Limited, which is in IBC. So it will help all of us to understand the ratios, how it behaves. Not good company, very good company, and a medium scale company. We could have dealt in detail all those things. Let us see if any such opportunity comes up in the future. And I thank each one of you for the active participation.
That was a wonderful session from both of you, sir. We really acknowledge your hard efforts in addressing the gathering over here. And I believe that each one of us who have attended this particular seminar have gained lot of knowledge, or rather I would say a brush up of the knowledge which is already learnt. And thank you very much. On behalf of Bangalore chapter, we wholeheartedly thank you for all your efforts. And we look forward to organizing one more session, a lengthy session like this and an interactive one in the coming future. Now I would like to request former Chairman Bangalore Chapter of ICSI, CS Parameshwar Bhatt, to kindly come over the dais and hand over a memento to CS Gopal Krishna Hegde ji as a token of respect. Indeed, it was a marathon session handling by you, sir. I think nobody would have done justice to this particular role as like you. Thank you very much, sir. Now I would like to request Pawan Kumar, former committee member of Bangalore Chapter of ICSI, to kindly come over the dais and hand over the memento as a token of respect. Thank you very much. With that, we would like to formally.
One topic, more than 5 hours. Same speakers. Same speakers with same face. Same face for 5 hours. Same face, yeah. We are looking at the same face, we are looking at the same face. That's also a record, 5 hours. That's also a record. We have created history in many ways. And this marathon session was possible, yeah. Because of the exchange of energy between the young and the energetic.
Indeed, that is why you are inspiration of many young company secretaries, sir. Thank you very much. And formally, we would like to close this particular session with a formal vote of thanks to all of you who have attended this particular seminar for the second half full day session today. Yeah. And I would also like to thank our office staff, security staff, and everybody who were part and parcel of this particular one day session. Thank you, one and all. And the dinner. The dinner is organized at the basement. Kindly have your dinner and you can disperse. Thank you.